Good morning. It's June 15th. We are going to be streaming today stocks, options, futures trading, looking at technical analysis, trading options, futures, stocks. Thank you for joining live stream. Sub up, like up, comment down. Happy money sticks around. Follow us on Twitter, HappyMoneyYT. We have Twitter Spaces at times. Happy to chat with anyone. And you can get on our Discord server. Free to join. I'll put a link for it in chat right now. Not on there. Do it. Got 9 pre-market likes. Thank you guys. Be a good day. We did get PPI this morning. I sold off after initially, now we're getting a bounce from it. I did my futures trade last night, which worked out well here. We'll go over it once more people trickle on in. Good morning to you, Buzzin'. Morning, CDB. I don't have any thoughts. I don't know. Might be spectacular, might be nothing. I'm curious if Ryan Cohen's going to be speaking. And yeah, I saw the post. For it, for the link to get to it. And I shared it on Discord. And then I realized I'm not a shareholder. So, I don't know. I might have to find someone else that's streaming it. Watch, listen. Very funny. This will be the first shareholder meeting. I'm not a shareholder. So, but yeah, we'll listen to it one way or another. Morning, take flight. Good trade day to you as well. Morning, kitty daddy. Pop one more time. I don't think they're the way of Blockbuster. I think he's done a good job turning it around. Cash flow positive. I guess this last quarter they weren't, but the trajectory is good. The trajectory has turned around. So I think he's early on stuff on NFTs, the marketplace, but I definitely think there's a market there, and I think we'll start to see revenue from that probably next year. It'll be more substantial. We'll see more use cases for it also. Don't tell me Nicola's still going. Like, I try and be strict about not chasing, but I need to chase more. Because you never know if it's a chase or if you're just getting in the beginning. Waiting for a red day is not always beneficial. Volume continues to increase. Yeah, Nicola looks nice still. Was this a Zip Trader pick? This looks nice. Sergeant, like that. What's the catalyst on here? This was a zip pick, I think, wasn't it? Oh, they had it. Wait, no. Yeah, this is Zip Trader. Barbecue's 10K was kind of interesting. Looking at some of the highlights from it. We'll go over some of the different points on it maybe midday once things are chilled out. Yeah, I saw that same post, CDB. I was actually, I thought I understood what it was talking about, and then I started reading through the comments, and then I got confused. It's like, I was like, oh yeah, it makes sense, and then I got confused as I read through the comments. Oh, my coin has a sell-off. Coin announces repurchase of 0.5% convertible senior notes due 2026. Isn't that bullish? Coinbase buys back 64.5 million in convertible debt. Stock falls nearly 5%. I guess if you think they don't have money to be doing that, that seems bullish. 29% discount to par value. I guess maybe the sell-off was from something else, and then it's been running since that news. 48 minutes ago. Yeah, maybe that's why it started to rally a bit. I don't know, the market's rallied too. Seems like this was maybe the news from it right here. 8:30. Yeah, I think that should be bullish. Alright, coins rallying up there. Yeah, that should be bullish news. Weird, slow response. It's highly unusual. Weird. It wasn't an algo-driven response, other than maybe this spike. Morning, Archer. Yeah, I mean, yeah. Agreed, kitty daddy. It could be like a Netflix. We'll see. Could be. But I like the similarities you have there with Netflix basically creating its own market. Morning, John. Morning, Doctor. Thank you guys for your pre-market likes. BlackRock close to filing Bitcoin ETF. The ECB raised key interest rates by 25 basis points, so they're not pausing. After adjusting for inflation, U.S. retail sales fell 3.3% over the last year, the 7th consecutive year-over-year decline. That's the longest down streak since 2009. Nominal sales increased 0.7% year-over-year versus historical average of 4.8. Little chart to better understand that. U.S. retail sales year-over-year, U.S. real retail sales year-over-year. This is inflation adjusted. Hey, pick 6 cards. What's up? Chinese President Xi Jinping has proposed an international peace conference on the Israeli-Palestinian conflict. Weird, this kind of lagging news on Coinbase. So PPI came in. Oh, never mind. Industry, US May industrial production I guess that's due at 9:15. S&P 500 is up 13.9% in the first 113 trading days of the year. One of the best starts we've seen in recent history in the last 25 years. Only 2019 and 2013 had a better start. China is rewarding its best behaved citizens with cheaper travel. Wow. Coinbase might have been just pumping a bit from SPY, I don't know. Might have a rally today from that news. Investors should be wary of stocks as a recession is still likely. JP Morgan Marko Kolanovic has said. U.S. jobless claims unchanged at 262,000 in June. Survey was 245,000. U.S. June 3-week continuing claims plus 20,000 to 1.775 million. ATXG, the therapeutic one, up 10%. Oh, Chinese one. I know, yeah, we have Monday off. Crazy. I was like thinking I should probably plan a little trip. I guess there's still time. It's Thursday. We can figure something out. Take advantage of the long weekend. Kava IPO? Let's see if I have it on Webull here. Not available on Webull. Oh, there it is. Kava Group offering 14,444,444. That's how many shares they're offering. Offer amount 332,222,200. It's coming out today. Not sure, what is this? Restaurant. Crazy. Offering price $22. Greek Chipotle. I've never been there. Is it a Greek Chipotle? Sounds interesting though. Must be pretty popular. Trying to go public. Greek Chipotle. Yeah, see how it performs. See how much volume comes in. Get a pretty raw picture of the supply and demand of a stock on IPO day. The SPY's ripping up there a bit. Glad I closed it short. So let's see, we're at 14 likes pre-market. Thank you guys, I appreciate it. And if you're watching yesterday, I said I was going to short the futures in the after hours. And I did. So at 5 o'clock they closed, reopen at 6. Like 6:30 I opened up 1. Can't really see it here, but there's yesterday. Won't give me the little crosshair thing. Have it. Yeah, so this is where the futures open back up at. So I opened one here. I was planning on opening up 3, and then I looked again. When did I look again? I think it was here. So I was like, I don't want to open up another one. It's at a low. So I waited. And then I just checked it later. I actually ended up timing it fine. And I opened up one here and then another one here. So those worked out nice. Then I actually just closed them right somewhere down here. Yeah, like right here. That was like a 0.4% move on the SPY. On the futures. The overnight moves are... That's when the market moves the most. So if you can kind of figure out the direction. I went short based on Powell pausing, which was expected. I think that's fully priced in. However, their terminal rate, they upped it to 5.6 from 5.1. So another 0.5% total increase on interest they're talking about, which is bearish. And then you have a head and shoulders here that formed. So we'll see. We'll see if the market needs to sell off a little more for it to actually be in a downtrend, I think. And that could happen today. Or it'll, start to confirm continued bullish momentum. But I think we might be, yeah, I think that might be it. Ooh, this is a good song. Listen to some pre-market music. That isn't Yaz. This one from Santo Gold is sick though. Yeah, Chasing Shadows. I'm moving up there. Germany is green. Guten Morgen, Bruce. Guten Morgen. I'm still showing it's red, but I've not had very reliable data from the Germans. It says negative 1.75% here. So, but this is 1.75% from their close, so it doesn't quite correlate. And of course, it's in euro, which after the conversion. My TD Ameritrade and my E-Trade both have extended hours on barbecue, which I think have been accurate. And it says, yeah, plus 0.72%. Call your mom. This is the MOAS. Why am I starting to move up? I can't help but think it's from that news. 0.96. Not sure why mine's negative. Alright, we got about 10 minutes to go. I like the lines. Kind of respected them. Might move this one. Get that low from Powell. Pretty big bounce in the market there. Well, oh, from industrial, that's right. So US May industrial production was negative 0.2%, consensus was 0. US May capacity utilization negative 0.2 at 79.6%. Consensus was 79.6%. Bank of America lifts end 2023 forecast for US 10-year by 25 basis points to 3.5%. Euro extends gain versus dollar to highest level since May 16th, last up 0.5%. Wells Fargo expects S&P 500 to end 2023 in 4,000 to 4,200 range. United States industrial production month over month in May Actual negative 0.2. Expected was positive 0.1. China's youth jobless rate rose to a record 20% in May. You'd have to earn about $129,000 today to have the same purchasing power that a salary of $100,000 had just a decade ago. Philly Fed June business index negative 13.7 versus May was negative 10.4. US May import prices negative 0.6. Consensus was negative 0.5. US commerce May retail sales positive 0.3. Consensus was negative 0.2. Retail sales excluding autos was plus 0.1%. US May retail sales excluding autos and including gas positive 0.4%. US inflation shock is over, so the Fed need to not hike interest rates anymore, according to the chief economist of the Institute of International Finance. Morning, David. All right, got about 5 minutes. Hydrating up. Nickel's up 12%. Wow. IEP's pretty flat. Bad. So Microvast, was it Microvast? No. Microvast chart looks pretty nice. NVIS, Microvision. So they announced a stock offering. And then they just canceled it. So they withdrew their stock offering. So it's ripping pre-market. They were like, no, we don't want to end the rally. Let's not do it anymore. I don't know why companies do that. I don't know if it's to affect the stock, like thinking that'll be better for the rally to continue, or if they'd really just decide we don't need to. I don't know. It's kind of strange. But yeah, that's why it dropped. I think they announced it yesterday or the day before. Share offering, and then nope. Reverse card. Potentially they're doing it to move their stock around, because this was in kind of a short squeeze, so maybe to get shorts to pile back on to squeeze them again. I don't know. Nat gas is up 3.5. I was looking at this yesterday. I was wondering if we were gonna have a little rally. Been pretty choppy though the last couple months. We played this little move up here. This actually screwed me. Inverse head and shoulders, played it nice, got in somewhere around here. Didn't take profits, of course. Came down here, I'm like, no, it's still going. And then held through all of this. And then ended up turning a plus 6,000 to negative 6,000. Yeah, that really screwed up my futures account. Natural gas has been called the Widowmaker. But yeah, just chopping around. I do want to go long on this at some point though. Need some sustained momentum. But it could be down at these prices for maybe a year or two. All right, where are we gonna get to? We're at 17 pre-market likes. Bad. 9:28, 2 minutes to go. I think barbecue is opening up. Pretty flat. Bigger spare trap no demand on barbecue. Alright, there's the bell. The silent bell. SPY is only down 0.14%. I've got GME with a little gap down of 1.5. Barbecue basically flat, it's up 1%. Nikola with its gap up. FRTX with a gap up 14%. Nikola 13%. Les Jews going again. 25% on this one. Nice looking chart. DFLI up 6.25. Domino's is up. They have earnings. Price target increase. Guess that's all it is. Wondering if coin will respond bullish to that news. Buying back. That MVIS. Here's how this one responds today also. They're retracting the share offering. That gas is up some. Phase is up. And the Yaz down a tiny bit. Maybe. Alright, David. I can't do it. Let's see. Beyond is down 1.7. Coin's down 4. Dish is down 1. Up is down 1.2. At the open. GME down 1%. The Jew is ripping. 41% there. Microvision's actually selling off. 2.13% on barbecue. At 870. Lo-Fi's down 8%. Wisa's down 8%. Oh yeah. Beer down 1.5. Birds. This chart. I still do. A snipe fallen to the long side. I think it's just been a dumpster fire. Down 8% more today. Peloton down 5.5. Take a little position on Ellie. when it's run up so much. Ours down 5 1/4. Yeah, Neo was good. We traded it before earnings, and we did well. I did cash card puts on it. Didn't want to hold through earnings, so got out for that. But yeah, it's had a nice rally. I mean, the chart looked bullish coming into it and bullish going out. The other one, run looks nice too. Neo's up 2.3. Run's down 1.6. Hey, Jan. Morning, Ace. GME. Much flat. Morning, trader name. Barbecue up 6 1/4, 1946. I actually do have market average into barbecue. And goes out. I see the momentum kind of shift though. I haven't seen it. Morning, Tony. I'm rallying up there 80%. Do you have a fundamental reason to be holding? Pulling? Doors down 5. Yeah, FSL looks nice. Up 1.8. Good looking chart. Especially now that they have earnings out of the way. Like it was pretty positive. A lot of volume. Good. Crossovers on the moving averages. Very liquid option chain. Have weeklies on E-Trade. Billion market cap, 38 million in revenue. Losing 35 million. I'm moving up. But yep. Kind of a widespread. Be expected. IDEX, of course. Jeez. Yep. IDEX, very nice looking. Buys rallying. We gotten any news on IDEX, like share offerings or anything? Jeez. Financials on this company are awful. EV, I can't remember. Yeah. The borrow fee on IDEX. It's squeezing right now. Buy ripping. Borrow fee on IDEX is flat. Not looking like much is going on there yet. Flat. That Sergeant. Pull you out when you're watching this stressful stock market. That'd be stressful. By Syrian Sheik. Yeah, maybe. The FLI moving. Yeah, another zip pick. RTX was the most recent. Holding up alright. Pick. Peek. Aye. This is why I close a position before the market opens. If one of my favorite market loves to retrace where it's come from. Barbecue 4% green. Wins down 4.
That was the tiny little popper.
5. Great moonshot. IEP is up 0.5%. Starting to print today. How can you trust that slob? Look at it with disgust. Good morning, it's me. Yeah, I think IAP will probably consolidate, which you're just naked long calls, the destroyer of premium data. Yeah, an engulfing candle yesterday did show some strength, so might not necessarily just sell off, but I think it's definitely slowing down. Got a little, yeah, got a bear flag there, got a head and shoulders. Unless if this breaks and we test the high, got a shoulder forming there. AP. But it's a nice stock to hold, maybe. So covered calls work. Don't have to sell shares if you don't want to trade it. I just ripping green now, 0.10%. Me up 6.4. The power and persuasion of the owl got me to get a Generac call yesterday. Better be right, owl. I got a much safer call than you too. I just got July's 130. I guess I only got one of them. Kind of expensive. A safe down 5%. Ooh, I like that. Hasn't had a ridiculous rally. But yeah, they're actually making money too. Interesting. And a reverse split. Been relatively good stocks that reverse splits. Yeah, they've been turning around. Look at this. Went from negative of 1 billion operating income last year, slowly turning around another positive 40 million. Well done, PaySafe. I'm gonna be a little less picky as I'm finding less theta plays. Less picky as far as IV. Look for such a high IV plays. Just look a bit more for the chart. Red's kind of stuck on here. Really suck. Still going to the moon. Barbecue almost 8%. They have earnings August. Got time. Spreads are silly. Wow, wow, wee, wow. Well, I guess I'll maybe be looking for a short entry today. Free entry, this thing is boosting. Wow, look at this spike. Look at the holy crap. Yeah, I'm gonna try and stream it. It's me. I don't have access because I don't have any shares right now of GME, so I have to listen in. I don't know how it's gonna work. Maybe one of you guys can do it. We'll just listen in on Discord or something. Or maybe I don't know. Not sure. Not sure what to do. Any ideas? What about Silvergate, Jan? I don't remember the ticker since it changed. Is it SICP? 5%? SPY just ripping. Is that from the manufacturing data? I don't even know. A short squeeze going on. Barbecue with strange movements. The liquid. Gappy. Does look weird. There's no volume in here. The liquid. Gonna hold IDEX long term. Sell cover calls on it. Try and get filled at 5 cents on the 50-cent calls for July. If that doesn't fill, just move it out a month. Go to August. They're so liquid, you probably won't get filled on any of these, but oh, maybe October. For long-term holds, I like to at least be able to sell calls on it. Look at that SPY. Or 38.52, so 439 was yesterday's high, which was yearly high, and we're going back for it. I might short just on the high, just out of principle. It only makes sense. Neo, yeah, Neo's up 2.5. It looks nice. FLI up 21%. Balcony. I was the play all along, 100%. It's my favorite meme stock. You're getting some lag. Then you drop frames. Maybe it's your end. He's barely green with this SPY. I don't know what's ripping right now. IP's up 1.3. That's nice. Ah, that's a good point. It's me. Yeah, can't you do it? OTC volume. Yeah, very illiquid. Nicola, wow, yeah, 25% ripping. Broke the pre-market high. Where I want to start looking at shorts. Start with one here. Be patient. Get another one here. Is that patient enough? I'll wait. Me -0.35. BBBYQ up 5%. I got real close to yesterday's high. 43906 was technically the high. We hit 43897. Nicola kind of finding resistance at pre-market high. Yeah, aware that I actually wanted to talk about that today. That was very interesting. Cameron, if you can tell me your control number, then I'll stream it. Yeah, someone DM me on Discord if they'd be so willing and able. Yeah, what the judge brought up on that 10K. I did listen to it last night. And I was like, because there's a lot to go through on there. And yeah, it says the included subsidiaries. So I guess I want to look closer and see if baby is even included. I think it was baby aware. I don't know. That might just be normal. Because he didn't. He was trying to say it's at a specific spot that they mentioned what's not included with the Chapter 11, but I didn't see that. It wasn't clear. And that's kind of when he cut off. So, suppose we have to look through it and see if we can find it. But the wording that is in there is that it talks about specific subsidiaries that are not included in Chapter 11, and that might just be standard language in that filing, but doesn't necessarily mean that there is something that's not included, or that is in there because not all of the assets, not all of the company is included in Chapter 11, which would be crazy news that hasn't come out yet. Because basically, we're looking at a Chapter 11, looking at a sell-off of assets just on some of the company, some of what we own as shareholders of BBBYQ, which seems a little crazy if that's true. I mean, the thing's in OTC because of it. It's like, I don't know. Seems crazy. Buy consolidating up here. GME is flat. So I don't know what is pumping the SPY this morning. Whoa, there's the break. I just broke yesterday's high. See if that's legit or not. It is. I need to close out. Yeah, that's going from green to red. Reversal candle. Yep, I'm gonna add one more up here. Would have been nice to add it on that wick, but oh well. It's not, or Mexico. And Supersonic Toys R Us trading halted amid capital raise till June 19th. There were announcement released to the market. What are you talking about, Melissa? Yeah, please do it. Where? They read it, but I know Travis was having some question or like disagreed that that was saying that specific spot, but then I think he was talking about another spot in the filing. Construction process almost done. Crazy. I was finally seeing the stock at 200. Oh, selling. Just a couple people. See if Nikola breaks that pre-market high. Yeah, I mean, this whole thing would have been like fake. All this going to OTC, I mean, not fake, like they're still Chapter 11 and restructuring and paying off debt or whatever, like protecting themselves from bankruptcy before they actually go bankrupt. But the fact that it would just be part of the company is outrageous. Like, biggest rug, not rug pull, but fleece over our eyes. That would be crazy. They might be setting up for a very easy trading day, which that would be much appreciated. A lot of volume this morning on the market, I think, too. Looks like a lot. Ton of volume. See if we're building the head and shoulders up here. We've got a little shoulder that formed here. Maybe getting a head here. There's a yearly high. Congratulations, you guys. Buy is at 52-week highs. Was it actually 52-week highs? Not actually, it's the yearly high. Yeah, the JP Morgan, that was interesting watching the JP Morgan guy. It sounds like they're still kind of negotiating that a little bit. As you can tell, because he kind of queried the 6th Street guy and he's like, he wasn't responding. So it's kind of over, but there's maybe a little more hustle going on there. The other comment was that the buyers would essentially get it for free. Yeah, I heard that. I mean, all that's good and well. what are we gonna get paid? Like Icon and RC, they don't need more money. I mean, I want them to make money on it, great, but it doesn't concern me how much money they make. Oh, there's your flash of little bit. There it is. That's the spot. Right there. Show it to a spy. Do it. Might be able to add another contract, I'm not sure. I don't know if this market wants to keep going or not. Moving a lot though. So volatile up here. Crazy. Just the 3 contracts I have are like moving a lot. Wow. Remind. Just busting through. I don't know. I think I'm going to hold for a bit. Still not quite buying it. JP Morgan's already fed. I think we'll still hear a little bit more from JP Morgan. But yes, it seems like it's nearly completely wrapped up with them. Leju 31%, Nikola 24%, breaking out of pre-market high. This move this morning on SPY is insane. 0.5% in like 20 minutes. Wow, look at that squeeze. Squeeze. What is pumping right now? Jeff Brains is up 18%. Microvision 14. FLI 12. 439.30 on the SPY. Oh yeah. He's squeezing. Dude. Holy crap, it's a crazy morning. Add. I can't loss from Hindenburg. That's true. I mean, nothing realized though, right? It's just cheaper price. Is it? Is AI still? Oh yeah. What the heck? AI specifically is pumping. So Nasdaq's rallying. Wow, new highs on AI. Unbelievable. How'd I close my short? Like, what are the Qs doing? Qs are about the same as SPY. IDX up 9.25. On average on Nikola. That is neat. Consider that this company will probably be bankrupt next year or two with your trading positions and ideas on it. Get married to it. Horse is expensive. Party City up. Wheels up. 10%. Or it's starting to look better now. Big looks good, up 8%. Gotta be careful. Keep your FOMO in check with such a frothy market. Just brimming at the top right now. But I haven't found many bullish data plays just because a lot of them have already moved up so much, and I'll be throwing in cash secured puts on a stock that's nearly doubled in the last couple months or month. Cash is a great position. A flat and just chilled GME is crazy. Do you realize more we had to give up another 7% to Morgan Stanley? Oh, I didn't realize how that worked. I don't know. No one knows, Tony. We don't even know if that was bullish or bearish in general. Like, I know the PP gang is, of course, seeing it as super bullish, and yeah, they've paid off. I think pretty much their ABL they pretty much paid off to JP Morgan, which is good. That's good for the company, but as far as for us shareholders, it doesn't really mean much. Really, not much from that bankruptcy court. Like, to me, meant much for us. Just as an outsider, yeah, it seems it was good. It seemed like the company's doing a good job. Some questions were answered, I guess. Like the ABL was paid off, so that I think was, we're waiting for that. 6th Street is a interested bidder, it sounds like. So I don't think that was known before. I guess what we had in the 10K had more more insight. But even that is so long and convoluted. That bit about just the listed subsidiaries are the ones in Chapter 11 and not all. That might be huge. If they announced it was paid off, 6 Street said they'd be credit bidding. But what was all that? I mean, they kind of went back and forth. JP Morgan guy and the 6th Street guy, so it did seem kind of unresolved. But I don't know. Yeah, we didn't learn anything about if 6th Street is the buyer for IEP or anything. But what people have researched, yeah, still the case with 6th Street. Play some shareholders with creditors. We're in a great position financially. It's kind of consolidating here. SoFi's down 6.3. IAP's up 1%. Apron's down 4.5. The reverse split kind of scares me on Apron, but I maybe set up a little head and shoulders. Maybe get back to VWAP. Oh, Blue Apron doesn't have options, that's right. Reese is down 5. Nicola still 20%. Jeff Brand's 15. Microvision 14. Yeah, AI stocks are pumping, you're right. Gallons down 1.4. Generax up 1.2. Excuse me. Gobi's up almost 1%. Lucid's up almost 1%. Palantir 2%. He's having a hard time quitting. Let's just wait for the market. Man, bear, pig, totally a thing. Unpracticable. The entirety of the event was unpracticable. Spy might just be bull flagging up here. Wow. Wow. Morning, Sahin. Appreciate it, man. There you go, Spy. Let it out. Pleasure bears. Decor. I have a tiny call debit spread on GME, just a weekly one. So I guess I do have some exposure to the shareholder meeting, but that's kind of... I don't care to have exposure to it. That helps at all. If anything, I'd probably open up a bearish play on GME. But I have a slight, very small, long position on it. But I don't have any shares, so if any of you would be kind enough to DM me on Discord your control number for the shareholder meeting, I'd be grateful so that we can listen in. Nickel at 24%. There you go, Nickel's popping now. New high, 26%. You really got pretty clear runway on this stock. Up to $2. Good liquidity on the options. That's nice. GME moving up a little bit, up 0.35%. I might be consolidating here. It is consolidating. It might be consolidating for new highs, I should say. No patterns of a top yet. Looks a little toppy though with those big wicks. Barbecue 1925 up 5%. Better if it was American. Pound is flat. Coin's kind of come back some. Yeah, I'm closing out. I'll wait for better confirmation. Dish is flat. Rupp is up 2%. Nice. Nicola 24%. DFLI is up 20%. Jeff Brand's 18. Wheels Up is going. It's up 14. About to make a new high. New high there. New yearly high. Congratulations. Big Lots up 7. Can feel FOMO boiling a bit. I guess we'll be sitting out for a while, waiting for the market. GME popping there. 1.3. Right when SPY broke the high, it turned on GME. Uh, 1.5 on GameStop. A little bit of volume at 26. Double top here. Yeah, I saw a little bounce on GME decor. We'll bounce up to 2620. Yeah, yeah, I'm not bullish on this market right now. This is just a little squeeze this morning, I think, a little short squeeze. The new people were shorting it. I mean, yesterday's news was bearish. The surprise was bearish. Oh. Yeah, I think we'll have a reversal today. But I don't want to be having too much bias at all. So if it wants to keep moving up, make money on the up. Kind of had this cup and handle from Powell. Had to break out of that. If it holds above yesterday's high, you know, consolidates, I think we'll probably keep grinding up today. Which so far it has been. It literally just magnet up there. Now it's just been consolidating above it, so need to see really that level break and be used as resistance to look for downside, I think, today. The banks are sound and resilient. The banks are sound and resilient. The FLI holding up 18%. Wheels Up's been rallying. There's 16.5% on it. So yeah, this Wheels Up looks good. SPY might be setting up an engulfing candle here on this. Somewhat of a double top. Yeah, looks like it is. But we still have 50 seconds on it. Double top and engulfing candle would be a good sign for reversal. VWAP's very high though. We'll probably see a breakthrough VWAP today, I would imagine. The banks are sound and resilient. So my long call and beyond is getting squashed. Short call is, of course, doing well. So it didn't make an engulfing candle on SPY. At least that's not how I count them. Like a full body over that body. Coins down 2.75. I'm going to add to my dish play. GME kind of rejected that. 26.20. Went back down to VWAP. Move it along with the SPY. There's this buy. Yeah, Nikola, that's true. Nikola's at 30%, 1.4. I mean, it's a vacuum for this thing up to $2. The way it came down here, just quick, not much consolidating. I see it here on the volume profile. Yeah, there's like not much volume trade at all here until like $2. So, yeah. What's the... Yeah, the borrow fee's up on Nikola too. In a bit of a squeeze. Eyes coming down a bit. Like the double top might be playing out there. 32% on Nikola. 1.4. See, might hit $2 today. I did add a short, or reopened a short on that double top. I have one though, so I'll wait for more confirmation, maybe a bounce to a resistance to add a couple more. But this could still be a bull flag too, so I'm not gonna go adding at the bottoms here. The meeting, no one sent me their control number, so someone DM me their control number on Discord if you want me to listen to it. Oh yeah. Never mind. That's weird. I don't need a control, never mind. We're in. That's so weird. Don't have to be a shareholder for this meeting. I guess I never did. I don't know. Maybe I have shares somewhere I forgot about. Probably the case. Alright, we're waiting for the... It starts in 10 minutes? 20 minutes. The FLI is volatile. 35% on Nikola. Grab it on that retrace to the VWAP. Weekly options on this thing would have been fun. There might not be moving much though, just because the IV is so high. Maybe just the shares. Alright, I've got my money tied up in a much better investment. You guys ever heard of barbecue? Up 6% today. Trading on OTC. Less than 20 cents today you can buy a share. Nikola's NKLA. Might be a good long back on VWAP here for an afternoon rip. No rush though. Missed the morning rip. We consolidate for a few hours and then give us an afternoon move. 6% investors would kill for that. Exactly, Cameron. Genius. It's not sold on Webull? That's true. Have to have another brokerage to buy it. GME really just moving with SPY. Carvana's up 5%. That bull flag. I close my shorts on there. AMC's down 2.5. Tempted to do cash secured puts on here, but I feel like they're gonna get news. The Ivy is too great. I must. I must farm the Theta. I'm moving back up a bit. And I got stomped out. And an ad. GME's up 1.25. That chart on Best Buy. Barbecue's up 6. Nicola's up 34. Flagging up here. Wheels up 15. Up looks nice as well. I like all this volume they've had around the split. Nicola's borrow fee is good though, it's elevated. Good signs on that thing. Let's see, Microvision's borrow fee still high. Can't even find up. Oh, there's like no borrow fee on Wheels Up. I might be bull flagging here. Goodyear's up almost 7%. Annual report of employee stock purchase. SPY breaking the high there. New high of the year, 439.81. Why will next week be interesting? What will it be interesting for? GME up 1.5. Is just chopping around up here. Give it time. You're chasing Nikola a bit, yeah. You want to do like a day trade on it? I'd wait for it to retrace back to VWAP. I mean, unless you're depends on your time frame. Like scalp trade it, you know, in and out in a minute or two. You know, it's bull flagging now. Wait for the break and grab it and sell it once it starts consolidating again. Longer term day trade. Let's see, 1050. So you have day traders in it right now for another 30 to hour maybe. So they'll take profits and you'll probably see it consolidate somewhere. You start scooping it up then, you know, mid-afternoon, maybe 12. I want to see some signs that it's gonna have an afternoon rally. Longer term, I know that's the thing. Like, I'm a bad one to ask for chasing because I saw this one like 4 days ago and I'm like, I don't want to chase. But again, there was a lot of stuff going on. It's not like there were a lot of charts that look good, and I just didn't pull a trigger on this one. Also, I was looking at cash secured puts on it, but you don't know which one's gonna go crazy, I guess. But yeah, we saw here. I'm like, it looked good, but now it's like every day it keeps going up and it feels like chasing, but we just don't enter. So once it's run up this much, though, if you just have a shorter time frame in mind, you know, getting in and getting out quicker, safer off. You know, if you grab it lower and now it's had this big run, you can hold through more dips and consolidation. Tuesday we'll see GME go to 30. You thinking little T+2 from this OPEX? Maybe. GME did have a big move up. Unexpected move up this week. Which could have caught the market makers off guard. Another little double top maybe. Could be doing a little cup and handle here too. Just chopped around at the highs really. Great. Barbecue 7.3% green, up 1965. We already had barbecue's earnings. The 10K came out yesterday or 2 days ago. It's totally different since they're in chapter 11 on OTC. I think that would be considered earnings. Give me a 28 tomorrow. We'll see, Sergeant. Yeah, so Nicola, bull flagging. Just have to see a breakout. Just how barbecue had that bull flag, but then it broke the wrong way, and that would have been a trigger to sell. If it breaks to the upside, trigger to buy. Yeah, calls in 5 minutes. I shouldn't sell 10,000. 437. Because it's at the high right now. That's a bullish play. But yes, you should. SPY only goes up. TTO's making moves again. Yeah, 16%. This has had a nice little sustained rally. In what, 2 days, 3 days? I think you or someone mentioned this the other day. Still needs, yeah, this might be the beginning of a bigger rally on it. I don't know anything about this. What's going on? Seems sketchy, but the chart looks pretty nice. Have options. Yeah, I like it. Pretty illiquid. $1 million float. Market cap's only 2 million. It's their quarterly revenue. They're losing a lot of money though. 18%. Chart looks good. I don't have much to day trade with right now. I don't know if I'd want to hold this overnight. I want you to remind me on this one. I'll just put it in my notes. I'll look at it tomorrow maybe. Up 16% today. Made some money on Nicola. Well done, sir. I know what you mean, Cameron. It is strange what companies can be publicly traded and just lose money over and over. Like, I've never had a business that just lost money. It wouldn't have been a business. I guess this is my only business that's lost money, trading. But I've slowly dwindled down to not losing money. But like a business? The leverage, the capital, capital leverage of capital. Never done that for a business, so that's why I've never had the option to lose money. Yeah, there it is, Ames. Sounds up 0.3. Beyond's chart still looks really good too. If you guys are looking for an entry on something. I guess I could get more upside exposure on here. I have some exposure, but not like for big moves. But yeah, I mean, this one looks as good as any. iBorrow desk is like Aggie. Yeah, the borrow fee's up on this. Actually, that's right. I still have exposure on here. I forgot. Got long calls. I've got a spread. I have exposure on Beyond. Okay. I'm going to put out a message to our Theta Farm members. Did open up a play today for the farm. Oh, the meeting. I forgot to do the whole thing, the shareholder meeting, the title, all that. Just swoop in, everybody. Sorry. All right. 3. They're late. They've got like a slideshow and stuff. What? Dude, this might be a big deal. They maybe need to shut down.
Please stand by.
Oh.
Good morning. This webcast is being recorded. At this time, I would like to turn the meeting over to Mr. Mark Robinson. Please go ahead, sir.
Who's that?
Good morning. It is now 10 a.m. and I call the GameStop 2023 annual meeting of stockholders to order. I'm Mark Robinson, GameStop's general manager. Ryan Cohen, our executive chairman and a member of the company's board of directors, presides at this meeting and has asked me to conduct this meeting. Please note that any electronic recording or live streaming of this meeting is prohibited. Before we get started with procedural matters, I would like to turn it over to Ryan to say a few words.
Thanks, Mark, and hi, everyone. I will speak briefly. My father always told me, talk is cheap, actions speak louder than words. My responsibility is making sure GameStop is run by managers who treat company money like their own. In corporate America, the people in charge, the professional directors and management teams, are not aligned with shareholders. They are always the recipient of stock grants. However, they rarely purchase company shares with their own savings. There's a big difference between risk-free compensation for showing up and putting a meaningful amount of your own money at risk. As a result, money is wasted, work is delegated, and a lot of time is spent managing to short-term expectations and pandering to Wall Street. I like people who roll up their sleeves and do real work. People guided by principles, not robots who seek to rest and vest. In corporate America, there's no shortage of overpaid executives, bad capital allocation and chronic waste, and serial delegators. As much as this behavior is both predictable and reprehensible, it is precisely what creates opportunities. Thank you for being a shareholder.
Thanks, Ryan. The rules of conduct and the agenda for today's meeting are posted on the virtual meeting portal. In order to conduct an orderly and efficient meeting, we ask that participants abide by the rules. Michael Verrecchia of Morrow Sodali has been appointed to act as the Inspector of Election for this meeting. Mr. Verrecchia took an oath of inspection of election prior to the meeting. We also have members of our Board of Directors participating today, as well as members of our management and representatives from Deloitte & Touche LLP, our independent registered public accounting firm. Although Deloitte & Touche LLP has indicated that it does not wish to make a statement, the representative is available to respond to appropriate questions during the question and answer period. If any stockholders here today have not yet voted and would like to do so, you may submit your vote during this meeting until the polls are announced closed. April 21st, 2023 was set by resolution of the Board of Directors as the record date for today's annual meeting. All stockholders of record or their proxy holders at the close of business on April 21st, 2023 are entitled to vote at the annual meeting. We have made available for inspection a listing of stockholders as of the record date at our corporate office in accordance with the requirements of Delaware General Corporation Law. Notice of this meeting was duly given in accordance with the company's bylaws and Delaware law. We received an affidavit from Broadridge Financial Services certifying that the notice of annual meeting and proxy statement were sent to stockholders beginning on May 2nd, 2023. The affidavit is available for inspection by any stockholder upon request and will be filed with the company's records. At the close of business on April 21, 2023, the record date for this meeting, there were 304,717,030 shares of the company's Class A common stock, with one vote per share identified as outstanding and entitled to vote on all matters presented at this meeting. There are present at this meeting, in person or by proxy, more than a majority of all the shares entitled to cast votes at this meeting. Based on confirmation by the Inspector of Election, I find that a quorum is present and this meeting is duly constituted for the transaction of business. Each of the matters to be considered today is described in the proxy statement, which was made available as described in the notice of annual meeting. The proxy statement has been filed with the Securities and Exchange Commission and can be found on the Securities and Exchange Commission's website and our website. The first item on our agenda is the election of 5 directors, with each to serve as a director until the annual meeting of stockholders in 2024 and until his or her successor is duly elected and qualified. The company's nominees are Mr. Attell, Mr. Chang, Mr. Cohen, Mr. Gruby, and Ms. Zhu. The second item on our agenda is the proposal to approve, on a non-binding advisory basis, the compensation of the named executive officers of the company. The third item on our agenda is the proposal to approve, on a non-binding advisory basis, the frequency of advisory votes on the compensation of our named executive officers of the company. The fourth item on our agenda is the ratification of the Audit Committee's appointment of Deloitte & Touche LLP as the company's independent registered public accounting firm for the company's fiscal year ending February 3rd, 2024. No stockholder director nominations or other stockholder proposals were properly submitted under SEC Rule 14A8 or in accordance with the company's advance notice or proxy access bylaw provisions. It is now 10:07 a.m. I declare that the polls are now open, and I will now call a vote on the 4 proposals. The polls will be open until the conclusion of any questions related to the specific matters under consideration at this meeting. We will now use this time to answer any stockholder questions on the specific matters under consideration at this meeting. You may submit questions through the meeting portal.
Anyone have any questions? I don't.
Okay, I do see a few questions here just related to Mr. Furlong's departure and then also the company's withdrawal of his nomination. So I'll try to touch on that briefly. As it relates to his departure, we don't speak on personnel matters other than to indicate that Mr. Furlong's employment was terminated and he resigned from the board. I will say with Ryan becoming executive chair, we feel very strongly that we have the right leadership structure in place to drive efficiency in this business. As it relates to the withdrawal of Mr. Furlong's nomination, I think it's clear that Mr. Furlong's termination and resignation, that it does not make sense for the company to support his nomination. Again, though, given Ryan's new role as part of management, we continue to believe management's perspective, and frankly, and more importantly, shareholders' perspective will be actively represented. Okay, I also see a number of questions just regarding direct registration of shares, short interest, and a number of similar topics. I don't have too much to say on that. We do continue to be supportive of our retail shareholders and have increased our disclosures related to direct registration for that reason. And then again, some questions also about vote counts and share counts. Again, I don't have too much to say about that either, other than to note, as with prior years, we'll file an 8K with the final tally showing the aggregate vote totals. And then the total number of shares outstanding is included in our quarterly report. Okay, going through the questions that have been submitted, I'm not seeing anything further in terms of questions germane to the meeting. So anyone who wishes to change their previous vote who has not yet voted and wants to vote should at this time cast their vote electronically. All right, it is now 10:11 a.m. and I declare the polls are now closed. Inspector, please tabulate the votes on all of the proposals.
Thank you, Mark. I am pleased to report the results of the proposals as follows. 1, Mr. Atal, Mr. Chang, Mr. Cohen, Mr. Grube, and Ms. Zhu have each received a majority of the votes cast, and they have been elected directors. 2, the non-binding advisory vote on the compensation of the named executive officers of the company has been approved by a majority of the shares present or represented by proxy and entitled to vote on this proposal. 3, the non-binding advisory vote on the frequency of advisory votes on the compensation of our named executive officers of the company of 1 year has been approved by a majority of the shares present or represented by proxy and entitled to vote on this proposal. And 4, the ratification of our audit committee's appointment of Deloitte & Touche as our independent registered public accounting firm for our fiscal year ending February 3rd, 2024, has been approved by a majority of the shares present or represented by proxy and entitled to vote on this proposal.
Thank you, Michael. I am not aware of any other business that should be brought before this meeting. This concludes the business of this meeting, and the annual meeting of stockholders is now adjourned. Thank you for your attendance and participation. We appreciate all the passion and support you, our stockholders, have for GameStop. This webcast will now end.
Mullen's moving. Thanks, guys, for listening in.
This does conclude today's webcast. Thank you for your.
If you haven't thumbs up the stream, do so, por favor. Yeah, we'll talk about this. Mullen's ripping up though. Good mullet fashion. I also made new high on the year. GME kind of sold off a little bit. Could be a sell the news a little bit, but probably not much. Imagine. Yeah. So Ryan Cohen's bit, I think, was recorded. Everything else sounded live though. So, yeah, I guess it would kind of have to be with the shareholder votes and stuff. It's been a while since I've heard one of those. GameStop 440 SPY hit. Unless you think that guy's pretty much flat out lying, which I've never heard from the general manager. It sounds like yeah, sounds like Cohen maybe wanted to get rid of Furlong. I don't know. It made me more bearish on barbecue. I mean, he wasn't going to, like, of course he wasn't flat out gonna say, you know, we had other jobs for him or something. Or he's working somewhere else now. But yeah, the way he presented it was like made me think that he generally doesn't want him there anymore. And that was it. It wasn't some other move with him. So yeah, that's kind of interesting. All right, I'm gonna make this post real quick to my Theta Farm members. Opened up 2 plays actually. AMC was the play all along. By squeezing. Like actually squeezing. Or 40.36. Guess you should have sold those cash secured puts on the SPY, Cameron. Not exciting. No, I mean, kind of. You heard from Cohen. Kind of reiterated what he said in the interview. But yeah, the furlong thing. It made me think that the tweet, not for long, was legitimate. Like, with, I mean, I know he's a troll, but I don't imagine they're on such good terms, like, as buddies, that he would just roast him like that and not make it public that he was roasting him, you know, as a joke. So there's either something else going on with him, or Brian Cohen's kind of cruel. Does like a dark sense of humor, so that could be cruel. Nicola's still going up, melting on his bull flag a bit. Fly is probably my favorite meme stock today. GTLO. Going back down to VWAP. Olin did wake up, it's up 14%. Oh, not cat. Oh, naked. Margin secured. GME kind of sold off from it, so maybe it'll sell the news type of event. No news for barbecue. Nope. Oh yeah, that's right. That was what I was saying. I didn't think he would do that even if he slept with his wife, but maybe he would. I don't know Ryan Cohen. I don't know Furlong either. I know it is. Yeah, he said not for long instead of not for long. So that yeah, I mean, maybe the tweet was real. The longest I've seen Cohen is on the interviews, and the most recent was the one from that kid. So didn't seem like you would say something like that, but you really can't know people just from that little bit, I guess. Workhorse is up 17%. Wow, that chart looks nice also. This is another squeezy one. Borrow fee on Mullen hasn't increased a whole lot. It's pretty stable. Well, I guess it has. It's been up for like a month. From 8% to like 70% last month. Check out Workhorse. This one could definitely get out of control. They haven't had reverse splits or anything. Wow. Yes, Workhorse's borrow fee has increased recently. Or no, I was just getting a weird chart on the other one. The borrow fee on this one also increased like last month. Still very low though. 4% up to like 7%. Doesn't mean it can't move. Nikola, 40%. New high of the day. I have to search for good news for BY outside of RC. Yeah, I mean the RC's involvement, how much he's involved is still speculation. All we know is that he was on the interested party list. So what does it take to get on that list? I don't know. maybe like submitted an email and said, hey, I'm an interested party, email me on updates. I think it's probably more than that, but I think it could be anything from that to active negotiations and bids. Could be an interested party. Other than him being there, I don't see any other involvement, hard evidence of his involvement. But maybe there is. Let me know. Freelance LLC, here's to Bezos. Bezos. Yeah, you messed up, Yin Yang. He has room to make a dick joke. Mullins filling that gap there. 43% on Nikola. Yeah, it might make that $2 today. I thought it'd probably chill out for a bit, but no, it just broke out of the bull flag. This is what you're looking for, this candle right here. Increased volume and new high. There's gonna be more here. So new high of the day on SPY. SPY's definitely squeezing some shorts today. After that bearish news yesterday, now this. It's glorious. I did see this inverse head and shoulders when we had that shareholder meeting. I felt like I was a little late, but yeah, head, shoulder, shoulder. Oh well, though, I'm fine not playing the melt up today, I guess. See where Nikola starts to consolidate again. If it does. Give me selling off. Yeah, a little bit. Down 1.6. .6 on Nikola. Thing's close to getting halted, I think. Yeah. Classic earnings, not earnings though, just shareholder meeting. Yeah, you could always scale out on Nikola. New high of the year on SPY. Might crash, might consolidate and then crash. You know. Nothing to say, it'll just crash. SPY is actually squeezing. Is this with the AI, like what's pumping? Bet the famous 5. Microsoft's up 2 1/4. Yep. Apple's pumping. It's up 1. Tesla's flat. Might average up into these beyond calls. Wait till tomorrow, see what it has. The play's free now, might as well put more in so I can lose it. GME's down 2.5. Has a gap down there to fill. AMC down 4 now. Coin looks like it wants to fill the gap to the upside. Buy is fully squeezing. New yearly high there on list buy. Up almost a whole %. Jeez. Yeah, Jamie's kind of selling off. I think it is a kind of a letdown from the shareholder meeting, maybe a bit. Remember I said yesterday, if anything, I'd probably be opening up a short position as an RSI divergence. Gap fill down here. Jimmy's really flushing now. 4%. Filling that gap. Gap's at 24.30. Spidey senses, huh? Sounds pretty good. Yeah, everything was selling off pre-market though. I was down a lot pre-market. But it's just totally inversed. GME. Barbecue up 6%. Nicola. Wolf flagging a bit up here. Jeff Brands 21. Mullen 25. Thank you guys for your likes today. We're at 41. Heard from Ryan Cohen today. Shareholder meeting. Pretty exciting. SPY making yearly highs. Over and over and over again. Nicholas squeezing. SPY squeezing. Up, bounced off VWAP. Got a lot of EVs pumping today. Go EV. The Polestar on here. Workhorse. All the EVs except for Tesla. Now Tesla's waking up. Just what SPY needs. Velvet pump. New yearly high there on the SPY. %50 there on Nicola. Just bull flagging. Flagging and going. Yeah, this thing's hitting $2 today for sure. Not even slowing up after the day traders are in it. Letting that runner go into lunch. New yearly high on SPY. EU closed 10 minutes ago. Barbecue still hanging out there. 5.9%, 1839. Oh wow, UNG's rallying today. Up 8%. Got another inverse head and shoulders. Yeah. Got energy, I think, pumping today in general. Yeah, oil's up 2%. That's helping the market. GME's bouncing back from that sell-off. Oh, I think it opened. I think it opened. So open up a trade on GME. GME July 23, 25. All credit spread. Bearish. I have seen Click. That's right, he bought that from Bed Bath & Beyond. That's funny. Been a long time since I've seen it.
Is here, Managing Director, Roth Capital Partners, and Scott Mishkin, founder, CEO of R5 Capital. Thank you both for being here. So as I look at Kroger, I mean, we saw the profit did top expectations. Sales came up a bit short. Bill, how did you find the report?
So the quarter itself was fine. Part of the earnings beat was on gross margin. And the point of contention, I guess, is the forward expectations are just a little bit less top line growth than they showed in the first quarter, and the possibility that the gross margin expansion that they had year over year diminishes a little bit. And what I mean by that is when inflation eases, as it has been doing, the prices that Kroger and other retailers charge ease a little bit slower. So they actually are paying a little bit less, although their prices they charge don't change at the exact same time.
Nicola kept going. There it is, 64%.
Temporary and
Squeezing up to $2
as we kind of progress through the rest of the year.
Understand. Scott, your thoughts?
Been a very nice, clean, tradable chart. Just in the last 10 minutes, it started to get kind of wild. But all today has been nice and clean price action.
We call it the Bentonville Express, and it's coming down the tracks real hard right now at Kroger. And we don't really see a way for Kroger to get out of the way. Walmart is automating.
Waiting for a pullback to go long.
Gives them a 20% productivity advantage. That means Walmart is.
We're at yearly highs. I've got a line up here at 441.71. You could look at fib levels and like extensions, I suppose. I just have some resistances from back here, and we're looking at highs from April in 2022, and shoulder from 9 2021.
When I think about some of the other names that we're watching, right? You have Albertsons, Walmart,
I mean, it's been
Costco. How do you feel about
crazy
the
ride.
landscape?
Last 5 trading days.
We agree with what Scott said.
Yeah, we're just in a short squeeze.
Our top pick, but in it, Kroger does have some opportunities that are unique to other kind of conventional grocery stores. They have a captive online audience that they can monetize via ad dollars, and they're opening new markets that they've never had access to with their partnership with Ocado. So they've never had access to markets.
Nice, well done, Decor.
Texas or San Antonio, Texas, or at least
Well
haven't had
traded.
access to them in about 20 years.
I like the puts as a hedge.
Centers in Florida that they now can access. So relative to Walmart, we do think
No cover calls.
behind, but relative to other conventional grocery stores, we would say Kroger is ahead.
Right, understood. And as you look at,
I think Kroger can get squeezy too.
Competitive landscape. I mean, inflation is still an issue for consumers. While they're still buying, they're being more selective, right? I mean, how does that affect the grocery chains overall?
Yeah, I mean, inflation's a big deal. Our data would show we're up about 30% in 2 years. And I think the big question as we go into the end of the year and into 24 is, do we actually retrench? In other words, we don't just slow inflation.
Eyes coming down a little bit here. Wait for Head and Shoulders. Have a break of this formation. Otherwise, we're just repeating some
vis-a-vis what was said before,
consolidation.
Kroger's relationship there. I think it's pretty tough sledding for them as they open these new markets.
Good opportunity maybe to go long again.
Florida's a great example. Publix is down there, and Publix is another company that's just gaining a lot of share. So normally you might think, hey, Kroger versus some of the other supermarkets maybe is better off. We don't think that that's the case this time. We think Kroger, along with the industry, is going to have
Nicola's stretching for $2.
But Kroger particularly
Up 63%.
It lines up against
$1.80.
Walmart, but also Amazon, and that doesn't get talked about enough. And what Amazon's doing to speed up delivery, we put them at about 10 to 15% share, and we look at Walmart at 20. We think those two companies could go to 50 within 3 to 4 years, and that's just going to leave a lot of people in a great deal of hurt.
Right. And Bill, your thoughts, because as we have inflation as an issue, what are you thinking here? Because you have top pick as Kroger. Are we worried about a recession or how consumers will behave?
So top pick Walmart, Kroger we are neutral on. Kroger does have more private. They do have more private label offerings than they used to. So in the sense that consumers are conscious of what they're spending, Kroger does have options for them to trade down to lower price points and stay in the store. And they have more of those options than they had during the recessionary period 15 years ago. But to Scott's point on aggregate inflation, generally that's better for the food retailers. When you get into a disinflation and a deflationary environment, people are going to start worrying about 2016, 2017 all over again, when for the food retail landscape, margins contracted, earnings didn't grow for multiple years. And that's the risk.
Okay. Thank you both. Bill Kirk,
Up,
Scott
kind of breaking
Mushkin,
out there.
thank you. We'll be right
19%.
back. CFO of Kava.
Nicola, Wiccan, Red Candle. Oh yeah, there's your Kava IPO. Jeff Brand's kind of moving. Kava go live yet? Yeah, Kava's live. Oh, free float's 14 million. See if it trades that in the first 10-15 minutes. At 3 million right now. Be kind of a good idea on how much interest is on it. There's a good amount of volume in the first hour or so on the stock. They opened it at 40 bucks. Oh my gosh. They like doubled it. Doubled the IPO price. Definitely gonna see some profit taken there. Yon's down 1.6. Yeah, all these EVs. We have Go EV up 17. Mullins up 16. I don't know what happened. Nikola sold off back to VWAP. Big profits. He's a squeeze play. Nice decor. Well done. So like 12. Yeah, maybe. I think the offering is at like $22. Wow, Nikola, surprised that didn't get halted down. Big sell off on Nikola.
Where they're spending. How do you feel about the economy and just trying to stay on track with your goals, but at the same time trying to get those consumers in?
Yeah,
the price point, right?
We're always being thoughtful with our consumers, and so while it's been quite inflationary, last year we raised menu pricing less than 5% in restaurants, really wanting to maintain that strong value proposition we have with our guests, and that's critically important for us and future growth.
Yeah, I mean, I love the landscape overall. When we look at profitability for the company, tell me about working with profitability going forward. I mean, you're the CFO, you're looking at the balance sheet. I saw same-store sales growth. That looked great over the last, 28% in the first quarter. That's certainly notable, and congratulations to you and your team. Tell me about what's likely going forward.
Yeah, so our unit economics are incredible. So we've got very strong restaurant level profits that are growing, and we've invested in infrastructure over time to be really robust and not require significant additional investments in the future. So that will really
Sounds like she's reading a script.
Continue to grow and expand.
How about growth through acquisitions? I mean, you acquired Zoe's Kitchen, and that was back in 2018. That was about a $300 million acquisition. Do you see any more? Are you looking for acquisitions, or if something pops up, would you be open to it?
Yeah, certainly we have tremendous opportunity organically, and we're executing against that growth.
She's not
plan,
reading a script though. Well done.
Feel very good about that, but we'll never say never. But our main focus is really taking Mediterranean and Cava across the country in a meaningful way through our restaurant openings on our own.
And how are they doing on the labor front?
MTLP Blue Sheets release rejected by the court. That's too bad.
Skill set that they need for the
I don't know.
How are we doing there?
I'll find that, but yeah, that's too bad.
Passionate about our team members, and back in 2016, we implemented a $13 starting
Cracker Barrel.
wage much sooner than anyone else was thinking about it. And so we've really stayed ahead of it, and we want to make sure that we're treating our team members with great wages as well as incredible benefits, so that we can serve with incredible hospitality to our amazing guests.
So at this point now, 1,000 restaurants by the year 2032, and this model seems to be working coast to coast. You're in 22 states at this time. Do you think you'll be expanding in other states, or just more in the states that you're in that seem to be working?
We've recently opened in Louisiana, and then we're going into other states as well. And next year, Chicago's on our sights to open in 2024.
All right, what's your favorite meal there, or what seems to be a bestseller? So in case somebody hasn't been to Cava and they want to check it out.
I love getting our chicken and roasted vegetables, and then I love our lemon herb tahini dressing, and then I top it with pickled onions, corn, roasted corn, and feta cheese.
Oh, it sounds so good.
That does sound good.
The whole thing, it's customizable, right? You build your own meal, healthy meal. You can make it with everything you love.
Absolutely, and don't forget to get pita chips and enjoy our crazy feta. It's absolutely incredible.
Oh, it's so nice. Congratulations to you and the team. It's so wonderful. Glad to have you on. CFO of Cava, Trisha Tolliver, thank you so very, very much. And congratulations to Cava and the team today. And it's trading higher today, folks. That's it, live from the New York Stock Exchange. Thanks for being with us, friends. I'm Nicole Petalides. Thanks for joining me here on Trading 360. I'll see you later, 2 p.m. Eastern Time for the Watch List. Fast Market is next.
Like a little head and shoulders either forming here, or we're having an inverse head and shoulders. See which one breaks out. Got a head here, shoulder, head here, shoulder, shoulder. One wins. IPO Roadshow. What about Jimmy Edisola? Wall Street's not gonna be happy about that one. I'm gonna take that one back on your next interview. Another data farm open. Like a lot. Beyond down 2.8. Going down 1.4. Still looks like it wants to fill that gap though. Dish down 0.8. Stay safe down 0.4. Peloton down 7.8. Up 0.6. GME down 1.6. BBBYQ still up 4.9. Nikola holding above VWAP now.
Yesterday, it was overbought at the beginning.
Having a laugh.
It's overbought today, and it continues to be overbought.
They're laughing about the market.
Why? Well,
Squeeze.
yields are lower, dollars
Squeeze
lower.
time.
Right. That's
Helping,
a good.
that's
now,
supportive.
That's a good thing for stocks. Why are yields lower and dollar lower? Right. I'm not sure if they should.
Oh,
be,
they ate lunch.
Because Christine Lagarde raising interest rates by 20%.
That's why the market gets slow during the day. I mean,
the ego on you.
It used to get a lot slower, but still, you still see it slow up. Thanks, Ace, for the gifted membership, man. Corey Gross. What a lurker name.
Right. So I'm not sure.
You've been summoned to chat. Ace Ventura sniped you out of your cave. For all your wounded, bullet holed up body out of there. Come thank Papa Ace.
I don't know if it gives them a reason to go up almost a full percent, but it gives them a reason to remain on the upside. But listen, I think it's not what Jerome Powell did, which was significant, but it's also what he said, which was significant. It's two things, right? He paused which I think he wants to pause, he wants to stop, but he wants to remain with hawkish rhetoric for that to do some of his job for him.
Sounds like a Control V type comment, the ape's father. But yeah, let's check it out.
Then guess what, Tom?
I'd like to see what Pelosi's loading up on.
Now you're talking about a soft landing, and it makes him like
as far as squeeze, it looks like it already has. $1 to 4.
If he manages this through this by talking hawkish, but keeping rates right here,
building a big cup here, maybe.
And they have 6 weeks of data to get
I'd probably
through, if we see that continuation,
for a short.
Inflation falling off. Tough talk.
If it breaks out and then goes support here on this breakout, then go long. But at this point, you're just right at the resistance.
Yesterday broke a 13-day win streak, and that's Tesla. Let's bring in Jenny Horn, markets correspondent.
Tesla.
And of course, our buddy Dan Ives, our network buddy Dan Ives, came out with some positive commentary.
Hey, network
Tesla,
buddy.
Now positive on the day after falling $10 from the levels we're currently
Jenny.
I know, and Tom, I know they did break that winning streak yesterday, falling about 0.7%, but it's sort of amazing the fact that Tesla is now the third best performer in the S&P 500 this year, given the fact that over 26% of that strength has just been now in the last month. I mean, this name has been on quite a tear. So even though we saw a dip yesterday, I don't think that necessarily dampens these bulls, at least not Dan Ives, who is really firing on all cylinders, saying that they're actually seeing this as an AWS moment for Tesla. Ives does believe that Tesla is now on track to hit its 1.8 million unit delivery bogey for the year and should be able to do it with a margin story that bottoms over the next few quarters and then ramps back up in fiscal 2024. He also believes that China demand this quarter is progressing strong with a steady few weeks in June that should translate into a record China quarter for their second quarter. Battery production out of Nevada was another element that he highlighted as a key advantage for Tesla, and they also highlighted the fact that
flip bearish.
production and launch
Up his head and shoulders.
heavily awaited Cybertruck finally later this year, which
You
is
bounce around this level, the little inverse head and shoulders. We're definitely still in a bullish channel.
EV Castle and now set to further monetize its success. They have a $300 price target on Tesla's shares, and actually, interesting enough, RBC Capital today went a little bit higher than that, raising their price target to $305 a share from $212. So pretty sizable jump with an outperform rating. And they said they're modeling the company's autonomous driving as a separate business. But actually more interesting than that to me was that they said that robo-taxis and autonomous vehicles in general could potentially transform society more than anything else in our lifetimes and save millions of lives and trillions of hours. Conservatively estimating 25% of Tesla's robo-taxi penetration in the U.S. as consumers switch away from this private car ownership. That's enough to get me excited. The thought of not having to drive ever again and having your car basically drive for you. I think we're a little bit away from that right now. But
You're talking about Gen I. You don't even have a car.
Uber I could ever imagine. But also, I do want to point out that Tesla shares now are the most overbought they've been in nearly 2 years. We saw RSI touch over 88 on Tuesday.
Yeah, it looks NGL.
On that 13-day winning streak. So
gave you my
I would say
thesis.
It depends how you want to read that. Obviously, it's just one indicator, but shares have been on an absolute tear. So then I think consider that when looking at Tesla, that this name, while it can go up, we do know very quickly things can sort of falter if the narrative around Tesla changes.
Wait, Jenny Horn has a license? Hold on a minute. Time out. Newsflash.
Exactly.
Jenny Horn
Rick doesn't even own a car.
Hold on a minute. No, Jenny, I'm on board with 2 of these things, but I'm not sure about one or the other, and I'll go through them. I think the robo-taxi that I've read could be as much as 62% of their revenue going forward. Think about how that will change the company. I think everything they're doing with upping production and what they're doing with margins, but China would not be cutting interest rates like they're doing if their reopening was going as promised, right? I think that's where I have a problem with this Tesla story is China, because their movements by their central banks the last few weeks actually cutting rates tells me that China may not be surging. And as you know, China is a vital part of Tesla's current day and their growth going forward, Jenny.
Yeah, I completely agree. And if the Chinese EVs were any indication of the health of that economy, I'd say things don't look too promising. I mean, XPeng, Li Auto, NIO, these names aren't exactly killing it on a year-to-date basis. Now, I will say there is this looming threat when you look at the Chinese-based EVs that Tesla's come into this market and they are a serious competitor. BYD is another one that we talk about so frequently. So that space is crowded. I guess it sort of depends on how you want to view that, because either Tesla is gaining market share or collectively that market is still not where we think it is, which I think is a really good point, Kevin. But the robo-taxis, at least I think, get me excited. And I think Tom as well, because we were talking about time spent commuting. I mean, this sounds like a lovely invention. I just not sure we're really there yet, because we talk about autonomous driving, the technology that Tesla has, but it's like we're yet to see that actually come to market. So that to me seems more like a dream that is longer term. But I mean, like you mentioned, it would be a crazy portion of Tesla's revenue. And I'm actually very excited about the Cybertruck. I do have a license. I probably won't be buying a car anytime soon, but I can dream.
Side business, Tom. Robo-taxi pillows. Side business. Write it down.
Side business.
Side cheese.
I tell you, robo-taxi's never going to work in Chicago. Have you seen our streets out there?
Yeah.
They're nuts.
No one knows how to drive.
Yeah, that's true. Yourself included, I'm sure. All right. Thanks to Jenny Horn, markets correspondent, breaking down the Tesla news. But now let's bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nathan, I'm going to read off a couple things, and I want to get your take on it. Vote was 11-0, unanimous decision to skip or pause, whichever way you want to refer to it as. They basically raised the terminal rate. Inflation comes in a little bit better, a little bit higher than previous expectations, and then unemployment rate goes actually lower, about 4.1% by the end of this year. So with those things in mind, why didn't they hike yesterday? Because this seems a little bit talking on both sides of the doorway here.
Well, they're trying to basically balance, hey, we don't want to do too much too
Yep,
fast.
for sure.
We want to let it marinate. We want to make sure that
nothing new today on barbecue.
On the one hand, and at the same time,
News we had today was GME's shareholder meeting. We listened to that. Made me slightly more bearish on barbecue, actually. Because it seems like furlong might have been just a legitimate termination, and Cohen's like roasting him publicly.
So that's what they're balancing right now. That's why they paused. They just want to allow some more data to come in, allow some more of that marination to happen with those 500 basis points that they've already dropped in 15 months. And the market's basically saying, based on the reaction from yesterday and today, well, number one, FOMO is real. Number two, it looks like they're saying, we don't believe you. You're not going to do that many hikes. You're not going to do 2, 3, or 4, even some of the members had stated there. And if you look at the probabilities, it's 65% for July, and then it goes down to 19% for September. Or they're saying, look, even if you give us 2 more rate hikes, you've already done 500, and we've took those hits, and the economy's still standing, so we're not too concerned whether you are going to be a little bit more aggressive or whether you are bluffing. So it feels like it's one of those two narratives that's going on over the past 24 hours.
Yeah, they are trying to thread that needle for a soft landing. But remember, Bank of Australia, Bank of Canada, they paused also and then hiked at the next meeting. So it's still on the table. The Fed did say that it's a live meeting. That means there's a potential that they could hike, but they've got 6 weeks of data, and that if that continues to improve on the inflation front, maybe that does extend that pause. But Kevin, Morgan Stanley came out and said they're done.
I said yesterday with Oliver Rennick on our Twitter Spaces, I think they're done. I think he wants to be done.
Yeah.
I think the data will tell him if he's done. But I think what Nathan broke down, that core PCE,
right.
That's what that was my favorite part of the press conference yesterday, because he really broke down by 3 sections. It was goods that are coming down. It was housing, services, inflation, which rents and leases are coming down slowly as they get re-upped. And then it was housing X services, which is wages, which that's the part which is as much as 56% of core PCE. That's the part that's sticky. That's the part that's not coming down, because there's a wage component in that. And you saw the wages component in non-farm payroll. So I think that's the part that's frustrating everyone. And he admitted, It's coming down slower than we'd like it to, but it is coming down. He is seeing something. So I think this is a case of the ball starting to roll downhill. No need to push it any further.
Right. Yeah. Let those lag effects take place and take hold. But Nathan, when you look at the unemployment rate of 3.7%, inflation still way above the 2% level, even though we've seen some improvement since the highs last June. And then retail sales comes out, it's up and it's better than expected. So people are still out there spending. Unemployment rate's still really low at this point, and they haven't broke anything. And I just, in history, they typically or have had to and previously had to break something to get those inflationary pressures finally down, because they're starting to get a little bit sticky at these levels, which is still above their mandate. So what's your take there, where the consumer is still strong? That's 2/3 of our economy.
Right, and that's why, if you think that the Fed is actually done, and that's it, then you're going to have a belief that inflation is going to come down, fairly quickly, or it's going to be on a steady, obvious decline. But if that's the case, then look at the consumer. Look at what the cruise line operators are saying. Look at what the airlines are saying. Look at Delta Airlines up 15 days in a row. The consumer is still spending out there in terms of the services side. Yeah, they're kind of funding some of that, perhaps with some more debt, which has hit a record high. But as long as the consumer is out there spending on all of those experiences, inflation might be a little bit more sticky than people think. And if that's the case, perhaps the Fed's going to be more aggressive than people are anticipating. And by the way, guys, let's take a look at what the market's relationship with the Fed has been going back to last year. They've doubted the Fed the whole time, and the Fed keeps on coming out and saying, hey, we have a dual mandate. Let me remind you, we're looking at those prices. They continue to come out, and it's like every time they kind of just, shrug their shoulder and say, no, he's just bluffing. He's not going to do that. But they have continued to raise. So do you want to fight the Fed? That's kind of what you're doing if you're buying right here, right now. And I think that you have to respect that from 2008 up until the pandemic, we were so conditioned by an ultra-accommodative Fed that I think that psychology is still playing out in this most recent rate hike cycle.
Yeah. Nathan, you mentioned the demand, and we had some good news on the cruise side earlier this week.
Lit my shorts still long right there.
This week. If we can get a chart of
see if this works.
Delta,
they
UAL.
Just reinstated their dividend.
Yeah,
all the head and shoulders here. Thought it'd probably retrace. Started to show support there.
Their cash is getting better.
Giving an inverse head and shoulders still.
Prices back down below
probably see
That's
new highs.
But if you look at the parabolic moves in some of those, they're all overbought on an RSI level, right, Kevin, on a technical basis. But you know, is that momentum, or is it too much optimism?
Well, Tesla. Right now, as we sit, an 84 RSI, that's not overbought. That's incredibly overbought. But if you look at a longer chart of Tesla, it's been a lot higher than it is. It's not at all-time highs. So it's one of those situations. And Nathan was right. There's a very strong FOMO attitude to this market. Like, we got to get in here. We can't miss out. And that is usually not the right way to play it.
Yeah, the greed index is at elevated levels.
I'm telling you, that FOMO's boiling.
That poll that they put out on CNN right now. Extreme greed.
Careful going long on stuff.
Guys, we've got to take a quick. Yeah, go ahead, Nathan. Go ahead.
Real quick, IndieX RSI is 78. The last time it was there was November of 2021. You know what happened after that?
Yep.
RSI is not going to tell you when they're going to correct, but it does tell you when we're near.
Yeah. For sure, the optimism's out there. The fear of missing out, the FOMO that Kevin mentioned, is out there. You just have to wonder, and you want to make everybody's eyes wide open at these levels and the parabolic moves that we've seen so far, especially over the last several weeks here.
This rate's like 10%.
Take a quick break. When we come back, we're going to take a look at Adobe. The software cloud company is near 52-week highs into their earnings after the close. Optimism high on this report also. Fast Market's coming right back.
GME down 2%. Nikola flushing below VWAP now. Jeff Brands broke out 50%. Jew, 26%. Carvana, 13. Thought I closed my short. Didn't realize it should open a long. And just retrace all the way back up. Nice consolidation here on Carvana. I'll have to remember that on a big red day. We get it before it breaks out. FFIE, nice looking chart. It's up 17% today. You guys have mentioned this before. Not sure if any of you are in it, but looks good. ETOO. Looking pretty good. Workhorse came down to VWAP. Up, we've been talking about today, it's up 20%. It's up 10% from when we saw it first. Yeah, it's up 10%. IEP's up 1.25. West up 1.25. That ain't bad. US 8%. Yeah, IDEX was what's it doing now? We're getting a little retrace back to this breakout. I'd like to maybe grab a long on this thing. There you go, SPY's moving up. It was just consolidating. You're at the next level. Yeah, Tree, if you're watching IDX, can you let me know once it hits 3 cents. My alert on here, just set it up better. Doesn't alert me. Scheduled price? Not a ton. Just this price. I can also have alerts for technical indicators, which is pretty sick. Need to set that up better. Into that. Eight and a half is good in, but since that's steep. Oh, never mind. That's wait. People jacks up sometimes at different time frames. Never mind. A little lower than that. On the 5-minute showing, it's right here, but hourly, it's way lower. Even a bounce on, yeah. That down. we get a double top on this buy, or if we keep yearly highs.
Right, so, like I mentioned, 40% in a month. The stock is up 80 RSI. It's gotten several upgrades over the past couple of weeks. There's a lot of optimism around the AI potential there. A multiple expansion has been going on, a repricing. How do we price Adobe? We're going to learn more after the bell. But given the environment, the FOMO environment that we're in, and that it's likely that there's, of course they're going to be talking about AI and everything, but if you had that bias that the analyst upgrades that have been coming intact, there's been multiple analysts trying to set these new street high price targets on Adobe, 1 to 500, then to 520, etc. And you had a bullish view heading into the report. Well, as you guys know, there's a lot of ways that you can play this on the bullish side. You could do a calendar call, you could do a bull call spread, something like that. But another way you could also play it on the bullish side is to do a bull put spread and go out of the money. So the reason I was selecting a strategy like this is just really to talk about when you're looking at a setup heading into an event like this, if you have a bullish outlook, if you put on a debit spread, then you're going to need that stock to move. But if you put on a credit spread, then you have the option of, well, maybe the stock just goes sideways, maybe it chops, maybe it goes slightly lower. And if it gaps up, I mean, that's great too, because this is a credit spread, and I selected the 460, 450 strikes. The stock has moved, so likely this credit is not going to be the same. It was about $3.05 at the midpoint when I looked at it, but it's basically a credit put spread, and you hope that you don't get bad news out of the report or a negative stock reaction.
Yeah, let's break this one down. We've got 310 credit. That's what it was trading earlier. As you mentioned, stock has moved up quite a bit, and that's going to contract the price of it. But selling the June 16th 460 put out of the money to the downside, buying the 450 put, neutral to bullish, $10 wide short put vertical. We've got 310 credit. It's more like 260 right now, right. Kevin. So if you collect about 260 on that one, you're going to have $7.40 or $740 per risk per spread on this type of trade, Kevin. But that 460 strike, that's got over a 72% probability of finishing out of the money. And that's what you want, right? High probability of success. So even if the stock goes down, you're giving yourself a chance.
Now touching 73%, the 460 put tomorrow. And remember, what Nathan's done here, he's allowed himself to be wrong and still be profitable. Right. I mean, it's $27 it could go down, and you still haven't touched your short strike. That's the power of big premium names like Adobe. I'm not worried about the share float. It's pretty chunky at 458 million, so not something there you have to worry about. So this is just what we talk about a lot in this show. It's a high probability short put vertical that is risk defined and collects theoretical theta. So it's really, you got one day. It either goes down through 460 or you're profitable tomorrow.
Yeah, and Nathan, with a trade like this, as Kevin mentioned, this is short duration, right? This is an example trade to kind of illustrate what you can do based on the potential movement of the stock going into earnings. But implied volatility is elevated going into this report, and you can collect more option premium with that type of environment, right?
Yeah, absolutely. I mean, it's one of those instances, yeah, you can see why perhaps the implied volatility is higher. We saw what happened with NVIDIA. We do note that the stock has moved 40% in a month, and it has that hot RSI heading in there. There's a lot of anticipation around the AI, what happens if they disappoint. So, yeah, I can see why they have such a big move priced in there. But, I'd also say, keep in mind, because of that short put, you've got that assignment risk that's there. So you want to close out that spread if for some reason it were to close in between that 450 and 460 strike. Or if you'd like to take assignment of that stock, then you'd have an effective purchase price of 457.
Yeah, good little lesson there. If it does go between the strikes, you've only got one day, really short duration.
And quickly, what Nathan was talking about, how would you take delivery of that stock if you had this spread on? Well, the one way to do it is take the profit in the 450 put. Sell out the 450 put, then you've got that just the 460 put on.
Right.
Now that would be a a spread with risk. If you take one side off, a great trader once told me, you no longer have a spread on.
Right.
You know, it turns into a cash secured put. But if you did want to buy Adobe on the downside and it got down there, just sell out the 450 put.
Yeah, and you have to remember, it's a $487 stock, so you've got to have, it's really capital intensive if you take assignment on that short put, if it's between the strikes and you get assigned on that. All right, great lesson here. Great look at an example trade there, neutral to bullish in Adobe. And thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Thanks, Nathan. But coming up after the break, Megan Brantley is going to join us to take a look at Amazon. This stock's up over 50% so far this year. It's had a nice rebound, even though they saw some softening trends as far as the retail side goes. But cloud business is where they make their money. Fast Market's coming right back.
VetaHook? Visionary EDU, this one? Chinese education? Yeah, this chart looks nice. Kind of weird, but nice. Like the bounce on that support. I don't like Altimmune yet. No, you could. It has that RSI divergence. It's a bit early, but it might be good. Dang, dude, you're getting all the picks. You sell barbecue. Should have already sold it. Yeah, all right. Yeah, I might pick up some Alta. A little bit of buying power. Spread's not too wide. That's nice. I like both your picks, Tree. Vedu's a little weird the way the chart looks. Like physically, the candles and stuff. Is it Chinese? I don't know. Yeah, just kind of barcodes. This one actually also has that RSI divergence. Alt took my buying power. Not sure if SPY is double topping here or
Amazon Prime, especially those new sign that
still have that long from down here on the inverse head and shoulders.
That is interesting that I will point out is that, our mentions, when we look at Prime purchase intent mentions, these are really keyed into these new signups. So, obviously we're seeing a slowdown in the expansion of, new members to the service. When we look at actual visits of people who are going to Amazon.com to order something, we actually see a slight improvement. Those are up by a couple points versus last quarter. So I think that, that's a positive sign for Amazon that may not necessarily translate directly whenever you're looking at new sign-up data. So it's definitely a little bit of a slowdown for Amazon, at least in our data, a tempering of growth that's really weighed down by that tempering of those retail mentions. However, we do see continued signs of growth and strength in those cloud services.
Megan, we all know that e-commerce is going through a growth hangover coming out of the pandemic, but their services business. And when I say services business, what they lump in there is they lump cloud, they lump Amazon Prime, they lump advertising all into this services business. That part's growing. And if you're an investor in Amazon, what you like is finally they've started to talk about the spending and expense side. And now they're starting to focus on being more profitable and free cash flow and things like that. So much like we talked about with Meta, they're starting to actually trim the other side of the ledger and let these good parts of their business that are growing grow. But you mentioned AI and how it incorporates into their business. It looks like they're really trying to grow, obviously AWS, but Prime as well in advertising. Is that the key to them going forward?
Yeah, I think so. I think that
NGL, nice.
Amazon has a lot of legs on
Up
its stool to
7.3.
kind of prop it up, and they're doing a really good job of leveraging all of these different sectors of its business.
Really need to
instead of just
hold
relying
above that
on one
breakout.
sector. I think if anything, the leaning into
You want
AI
to
and the leveraging of AI
retest
technology only stands to improve these different
retest
sectors
this
of
level.
Amazon's business. And if you think of even potentially advertising, I believe that even on its last report, it bested advertising expectations. And this is in what could be considered, a weak advertising environment. So, it has a lot of room for potential growth. And another area that we like to look at, just when we look at a company at large, is how is it performing from a consumer sentiment perspective? Because that's a really nice
Beyond down
long-term
4.8.
lens. And Amazon is actually improving on that basis. Happiness is up by 2 points versus last quarter. And, we're seeing
It looks
positive
good though.
trajectory on the different elements, not just in its Prime, but also in its cloud. And whenever we look at this, like, especially from a retail perspective, just because that's where our data has so much insight, when we look at Amazon versus other retailers, whether it be Walmart, whether it be Target, even Costco, we have Amazon right on the same level as Costco, which is a really big vote of confidence in our data, because these are both, considered premium services, and it's about 20 points higher than the consumer sentiment for Walmart. So I think that that's a really big gap, and that's something that we've watched. We've seen Walmart gain a lot of traction and gain a lot of new consumers, but we're not necessarily seeing it make a dent in Amazon. We're not seeing, we're seeing consumers still being, liking this Amazon service and liking it even more than they were a year ago, a quarter ago. So Amazon's obviously doing something right, and needs fine-tuning, and anything that it's doing on the back end from a profit perspective is just extra for investors.
Yeah, and we've seen the stock rally, as I mentioned, about 50% so far this year, Megan, but they don't have earnings till the end of July. I mean, if you guys had an earnings score now with some of these metrics starting to improve a little bit, it seems like the stock's made a parabolic move. Does your data support that at this point, or would you wait for a pullback?
Our data is almost exactly neutral right now. I think it's at a 1. So for us, this is, if you're Amazon, that's actually probably pretty good news, because for a while we were more in the negative camp, just as we saw some normalization, some competition rising in cloud services. And we have seen that happiness improvement, and we have seen that improvement, especially in even the e-commerce web visits that may be a bit unexpected. So we do think that this is justified currently at this level. But we don't have, our score doesn't lend a ton of gas in the near term, at least from a bullish perspective.
All right. Great stuff. Great data as usual. Megan, appreciate it. Have a great day.
Thanks, guys. You too.
All right. That's Megan Brantley from Likefolio breaking down the data for us here, Kevin. mega cap tech, right? This is right in the mix. Now, there's one thing, caveat that, like, you know, they have a lot of retail information on Amazon just because of what kind of data that they gather. But at the same time, they've been losing market share. They're still growing in the cloud business, but they've been losing market share to Oracle,
Well, Oracle's
Microsoft.
the one that's really, I mean, you saw their price of their stock. Yeah, Amazon has some troubles, even though they're growing. They have some troubles in a couple key areas, like move back to brick and mortar. Right? Their e-commerce is such a big part of their revenue.
The consumer pulling
Jeff
back.
Brand's bouncing off of VWAP.
Exactly. So that affects
41%.
Digital ad spend, not really where they want it to be yet. So, but yet the stock has run a long way, and it should have. You know, it goes back to our conversation we've had a couple dozen times, Tom. Has the stock run up too far, or did it run down way too far? Right. I mean, that's a lot of these NASDAQ names. They got in.
Crazy. Carvana, 14%.
The recovery is good, and you're right. RSI, it's not overbought. It's one of the rare stocks that isn't overbought in the RSI. It was, but it isn't
the
now.
Magnificent Seven, one of the stocks that hasn't.
What I did, Tom, for a name like this, and there's several things you could do. I did the calendar spread with 2 short call verticals, just a short delta on this play. But what this does is I bought the 120 put calendar 2 weeks though. I went out from July 7th to June 23rd. So next week, and then 2 weeks out to July 7th. And I bought the 120 put calendar. But then I went and sold 2 of the 130, 132 call verticals. And that got me to under 20 cents net debit on this. You're collecting a little bit of theta. So this is one that, you know, it's not a home run, but if you want to do this, maybe if you have long stock, right? It's selling call verticals, but they're risk defined, so you're not taking out your upside. This is just a short-term, short delta play against the rest of it. So it's a 2-week calendar, put calendar against one of those versus 2 of the call verticals.
Yeah, let's break this one down because it is a ratio spread. I think we've got to make that clear. In the put calendar side of it, you're buying the July 7th weekly 120 strike put, selling the near-term June 23rd weekly 120 put, and then to help finance that, you're selling twice as many 2-lot of the 130, 132 call vertical in the June 23rd weekly cycle that expires in 8 days, paying a debit of roughly about 20 cents. You can see here below that break even of about 111.60 on the downside, you've got $20 in risk below that level because you're paying a debit for this spread. But above that 132 strike, you've got about $420 in risk on that.
Yeah, the margin on this spread's $400. You paid $20 or whatever you paid for it. That's the risk.
Right, the $400 because you're short a $2 wide call vertical, but you're 2 times. So there's the ratio side of it. Trying to collect a little bit more credit to reduce the price on this 4-legged spread. Now you've got some assignment risk on your short 120 strike put going into expiration over the next 8 days, and also on your short 130 call over the next 8 days. You've got some assignment risk on those in case the stock does move lower or move higher. Go ahead, Kev.
One last thing. If you wanted to move the long put to the June 30th expiration, it's then about a 20-cent credit.
Yep. But that would shorten up the duration on the put calendar on that example. But a good look if you think this thing maybe has been overbought a little bit, maybe it grinds lower, your apex of profitability at or near that 120 strike on this example. All right, Kev, that's going to do it for this segment. But when we come back, we're going to take a look at Target rebounding strongly this week after falling to nearly 3-year lows. The stock has been getting pummeled so far this year, but making a rebound. Fast Markets coming right back.
SPY yearly highs. Congratulations. We did it. We did it, you guys. Yearly highs again. Hey, Julian. Not since yesterday. The 10K they released is huge, and we're still kind of pulling stuff out of that. Potentially, the Chapter 11 bankruptcy protection is just on select subsidiaries, so not necessarily. Bye Bye Baby is maybe not even a part of it, and I mean, which would be crazy. That would change everything. But if that's the case, no one knows that. But if you think about it, in the court hearings, they're never talking about Bye Bye Baby either. But the 10K kind of referenced that might be the case. So I'm looking into it. We did it. Took profits on those longs. I even flip back to short. A double top here. Have that inverted hammer.
There's multiple contributing factors. Rates have been coming off a bit here today after a bit of a spike in reaction to the Fed, but again, dust settling from some central bank activity in a very positive fashion in terms of what we're seeing as far as stocks and stock index futures products.
Yeah, and dollar lending support, as Kevin mentioned earlier on in the show, but yields are also, Ben. But if you look at the 10-year, you know, down at 3.72, it's still in a slight little uptrend. It's above its 50 and 200-day moving average. It's not like we're completely breaking down on yields at this point.
Absolutely. I mean, I have to agree. I think
Liechtenstein.
Kind of things that has me sort of scratching my head here still, Tom. I mean, you mentioned the 10-year. I've got my eye on the 2-year, the shorter dated. Not on the screen here, but to 3.75, I think it was. I mean, nearing that 4% level swiftly. And ultimately, that creates a bit of a headwind for stocks, while investors really have shrugged that off for the most part so far. At some point, it's a matter of when, not if, that's going to become a bit of a problem. So keep an eye on that upward trend again in the 2-year, around 5%, more closely tied to the Fed expectations that we will see further hikes still to come this week. I think everybody's sort of focused on the pause, the skip right now, but I think we need to have a sense of realism here and kind of focus on some of the data ultimately and also expectations in terms of what's to come. And there's still some more hikes headed our way, it looks like.
We'll wait and see about that, Ben. This pause that they're on, you know, lending a little bit of support. I think the market likes it at this point. But stocks up, bonds up. That means yields are down, and the dollar is down, also lending some support. All right, thanks to Ben Liechtenstein, host of the
Liechtenstein.
show. But now let's bring in George Tillis, senior markets correspondent. George, I wanted to hit on Target, kind of expanding our discussion on retail.
So tomorrow we have
Amazon a little bit.
Waller speaking, Barkin, consumer sentiment. Not much data tomorrow though. With how we've been squeezing, we might just squeeze tomorrow too.
After hitting over about 3-year lows earlier on.
I guess this is just
decelerating trends for this stock.
From the pause.
But at the same time, an activist insight, this report came
Getting
out
a little
and
blow
said,
off the top from the
hey,
pause.
I don't know if it's a recommendation, speculation that some activist investor should or may come into this stock, and that gave it a bump.
Yeah, there's a lot of news surrounding Target, but at the end of the day, you're right. You're looking at it on a 3-year basis. The chart is to the downside. I mean, it's starting to look a little constructive, maybe around the 134 area on a weekly chart. But let's take a look at what's going on with the business.
Are you still bullish on barbecue?
Consider major competitors like Walmart.
I mean, it's risky. Definitely a lot of risk. I'm maybe slightly less bullish on RC's involvement after their shareholder meeting and hearing that it sounds like, I don't know, the termination of Matt Furlong might be just what it looks like. Nothing else going on.
In sales, last quarter was barely 0.6% to the upside.
But the 10K filing seems like it could be pretty bullish.
To the upside. So you're not even hitting single digits in sales.
I mean, very, very bullish if we're in Chapter 11 just for part of Bed Bath & Beyond. Not even all of it. We hold shares that have ownership of parts of the company that aren't even in Chapter 11. That would be crazy.
Per annum. That's, again, a little bit more supportive in terms of shareholders. There is some activist investors who may become more involved in Target.
Heck yeah, Decor.
Price, they like convenience, they like
it's a great idea.
And selection, that's what Target provides. But the company itself has been struggling in the last year and a half because of inventory.
230.
Merchandise mix has been sort of a challenge for the business. And of course, promotional.
You might have time to average into it because this could chop around and you can keep going up a little bit.
But nonetheless,
but
if you look at Bernstein, they're actually quite
momentum's to the upside has slowed down at least. So this could be the top. I've got different EV puts. I've got puts on Lucid. Trying to get puts on
hopefully they've cleaned up some of the inventory gluts they've had in the past year, but
also Fisker,
dealing with some of the
and even First Solar,
which have really hurt margins for the business.
But those are like bankruptcy puts. Those aren't just for a downtrend.
On this show is that delay in discretionary purchases, right, by consumers. So is inflation coming down? Is that actually
Frontier 4% up? Wow.
Because if you think about it, if people are spending less on essentials, maybe they can start to buy those discretionary, and they're getting their inventory right.
So yeah, the thing about it is the merchandise mix is important here because if you look at Walmart, Walmart, about 40% of their sales comes from staples, foods, of course, non-discretionary items. But you look at Target, home goods and accessories, if you think furnishings, that's about 40% of their sales. So they've been really hurt outside of the traditional business issues from the standpoint of discretionary spending. I think inflation's really hurt Target because people have been apprehensive to add more furnishings for the home. We know that the home market is relatively challenged right now, and people's budgets are constrained. And I think that's really hit Target from the standpoint of the macro environment. So that's something you have to keep in mind. But again, on a forward basis, looking at discretionary stocks, companies like Nike, they seem to be recovering. Some of the elements of discretionary, the discretionary industry group seem to be picking up a little bit, especially in the retail apparel space, I've noticed, which again, apparel is about 20% of their sales for Target. So we may be moving into a better trend.
Yeah, could be trades.
Furnishings and of course,
the macro environment is different than it was.
Again, something that's constructive for shareholders as well.
Where billionaires are trying to preserve capital more now than ever. So, but maybe not. I mean, you start buying them up. Just start buying up the distressed companies, and maybe if they're already starting to do that. I don't know. I feel like we haven't gotten to that point yet in the overall market, but individual companies, of course, can get there sooner than others. So.
Well, they're closing stores in specific cities.
I don't see Bed Bath & Beyond as like this American iconic brand.
I think to people.
But it does have a brand name for sure.
Yeah, you got to get some of these big cities to take care of that. But Kev, looking at this stock, it's up another 2.8% today. If you wanted to look at an example trade here, and this is what I did, kind of set something up where I can limit what the
I saw that Instant Pot and Pyrex were going bankrupt.
Setting a specific duration, staying risk defined. So the strategy that I looked at, Kev, is a call
Exactly,
butterfly,
Trace.
but at the same time, I'm going to skew it, make it unbalanced a little bit, so I only have one break-even point. Either above or below that is where I'm going to be profitable or not profitable on it. And it's a lower cost input than maybe doing a different strategy like a call vertical. So going out to the July monthly cycle, so 36 days till expiration on this one. Buying the 135 strike call one time, selling 2 of the 145 strike call, and then buying 1 of the 150 strike call. You're paying roughly about a $3.10 debit. Whatever you pay for this call butterfly that's unbalanced is your risk. You can see the break even there, about 138.10 to the upside. You don't need that big of a move above the current share price to get there. Now, the price of this is probably closer to 330 at this point, but the idea is what you pay is your risk. The kicker is near that short 145 strike that you sold 2 options on is your apex of profitability on this. So while you think
Instant
it might
brands
be
too.
growing higher, you want it to kind of
Those never expired coupons are iconic.
go above 150. It's still going to be nearly a double on this one. Kevin, your thoughts on a directional call butterfly?
No, I do trades. I think we will see a big crash this year. Potentially not till next year, but I think we'll still see it this year.
Between 135 and
More as to the downside.
on target where you are using a $5 call vertical to finance part of the $10 long call vertical.
Right. And if you're looking at just the call vertical, that $15 or the $10 wide call vertical that you're buying on something like this, here we've got 310 for the butterfly, but on the call vertical, you'd pay over about 420 on that. So that by adding that that short $5 wide call vertical lowers the price entry point, but it's still a bullish example here if you think the stock over the next month is going to continue to rise. All right, that's going to do it for Kevin and I today here on Fast Market, but stick around right here on the TD Ameritrade Network. Next Gen Investing's coming up.
Little uptick on barbecue there with some volume. 380,000. Yeah, it was a purchase for 350,000 shares. 1950. And rack up 1.25. Guess I won't have to ban the owl yet. Plus still hanging out 30%. Jeff Brand's sold off quite a bit. Midday slow chop. If you get a reversal sometime today. Otherwise, we're still looking bullish. Numerous government agencies have been hacked in a cyber attack. The agencies and offenders are not yet known. Rosneft nears deals and tender to sell large batches of oil over next year. ECB policymakers began debate on evening out the interest rate corridor. 1 in 2 people who work in finance would change jobs if asked to spend more time in the office. I know I would. Largest firms in the world, defined as having more than 50,000 employees, anticipate cutting 10 to 20% of their office space by 2026. And
yesterday, slightly lower, slightly mixed, I would say. So pretty much digesting as quite of a Fed move, post-Fed move, as I've really seen in quite some time.
Yeah, it was relatively quiet. Even the Russell in green territory now, Jenny. So we'll see where things shape up. Just the melt up is on, though, seemingly. It has just been relentless.
Ubo's had a good pop.
It is.
That's up
Most
3.5 today.
We're talking about throughout our show have seen really sizable moves even week to date. So excited to get through. Seems like it's a pretty optimistic show as far as I can see. But we'll kick things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes. Our FOMO discussion today
Long day to
is one of
UVXY
the
calls.
last companies that's reporting
Yeah, I don't think that's a great
earnings,
idea.
last sizable company reporting earnings. That
Yeah,
is
the little
Adobe.
Up on Barbecue just got faded away.
Quarter today after the closing bell.
Very
Shares
liquid
have gone
today.
up 7% week
Other than
to
that
date ahead of that
big
report.
350,000
And then we'll
purchase.
discuss, of course, all things Tesla. As Dan Ives says, the street is starting to factor in an AWS moment for Tesla shares. Even though it did break its winning streak yesterday, we are seeing shares higher in today's session. Last but not least, we will look at Kava Group on its IPO day, with shares now trading almost double what their IPO price had been. So catching a lot of attention because this is the first restaurant stock that's gone public since Sweetgreen back in 2021.
Very, very interesting. I've actually never encountered one of these Kavas, so maybe George or someone that we know will be able to shed some light on that before I could garner. Mediterranean Chipotle was basically the best way I could sum it up. So we will see. Obviously, the Tesla story is interesting. Stock's been relentless.
Mediterranean Chipotle, huh?
And then Adobe. This is one of the key primary earnings announcements still left on the calendar. So excited for that discussion. Not endorsements, not recommendations. Let's do upvote, downvote. Again, not endorsements, not recommendations. Jenny, there's not a lot of tying these ones together, so we can just sort of do it
down
our
a little bit.
way. We'll do them one by one, sort of narrow it down as we're going here. But
This is coming down 2.8.
And unlike kind of generally how seemingly things have been for Target lately, it's having a really nice day today.
It is, and I think definitely a welcome move higher as Target shares are down still about 8.5% on the year. Still down about 26% from their 52-week high. Now, they did announce raising their dividend by 1.9% to boost now their implied yield to 3.3%. This will go into effect on September 10th to those shareholders on record as of August 16th.
Peloton down 9.
This does mark its 52nd consecutive year of raising their dividend, but But I also think this is pretty interesting given the fact that they have seen a pretty steep sell-off, as you could see from the daily chart. Their yield is now more than doubled their closest peer, which is Walmart. I typically like to compare them, although, Alex, I will say on a year-to-date basis, the two do not look comparable at all. But a Bernstein analyst did note that it has not been an easy 5 quarters for Target, and the recent controversy over the Pride program and resulting backlash from both ends of the spectrum have now only made things worse. More recently, there have been reports that both the traffic and credit card data through May and June have been weak as a result, so we are actually seeing this now materialize for Target. But Bernstein believes that now is actually the time to buy the stock, as it thinks the recent sell-off is a significant overreaction. The firm says they do not think that Target is another Bud Light story specifically. Even if their second quarter is soft, they said it's already priced in, and the near-term outlook still does remain favorable for Target, a name that has fallen so much out of love. This was one of those pandemic names where all we could do was praise them. But I think this just goes to show that in an inflationary environment, Target has higher prices than, say, a Walmart, which is really, I think, speaks to the I would say, disconnect between these two companies' performance this year.
Higher stock price today as well, but that has not been the trend as of late. The stock has gotten punished pretty severely over the better part of the last month. A lot of red candles in a row to the downside. I hear the analyst note from Bernstein, and I think it's pretty straightforward. They're saying, hey, this has generally been a tougher time for Target, but the stock kind of reflects it. So if you buy into that, the message is pretty clear. The outperform rating, the 183 price target. We talked Target not that long ago, though, so I'm going to say downvote for Target. A very interesting story, and believe it or not, even though with all the green on the screen today, it's the only name on this list that's actually higher on the session. So next one on the list is Nike. This is another analyst move.
Nike, I keep saying it's the last company to report earnings, being Adobe, but no, Nike actually still has to report their earnings, which are expected Thursday, June 29th, after the closing bell. Now, RBC Capital did trim its price target on Nike shares to $138 from $145, but with an outperform rating. And they said heading into the company's fourth quarter results, they think that the sentiment on the stock is muted given its U.S. exposure, as well as elevated inventories and benign China reopening. The firm adds, however, the consensus forecasts are realistic and now on a relative basis. Nike's growth momentum, as well as its progress on its inventory clearance and brand heat, are still among the strongest in the sector. Now, among analysts that cover Nike, it does still have an average rating of outperform. Its price targets range all the way from $95 a share to $160. So right now trading just below $112. It's definitely falling at the lower end of where analysts see the stock over the next 12 months. This is another name, though, that has seen some weakness on the year, still down about 5%. Year to date, up about 5% for the week, though, and now up 35% from its low. But we'll have to see if this is going to be a Foot Locker type earnings event or a Lululemon type earnings event, Alex, because we've seen retailers go completely different directions this quarter.
I can't believe it's still 2 weeks away. It seems like we're so late in the earnings season that we just have like a few names still left to report, and we're still literally 2 weeks away on the calendar from Nike's earnings. But I'm going to say upvote. We haven't talked Nike in quite some time, kind of a reasonable amount of time still between now and earnings to talk about a potential trade illustration here for this one. But the analyst, I think, has a pretty straightforward message. They say that, yeah, that it's kind of a tougher time for the entire industry, but this is the best one amongst the group, or one of them. So explains the outperform rating, but also the adjustment in the price target lower. Next one on the list is Kroger. Very, very different company. Very, very different news, as we're actually post earnings here on Kroger.
And it is pacing, or at least it was pacing earlier in the session, for its largest percentage decrease since October of 2022, on the fact that it did actually maintain its full-year earnings and same-store sales outlook, but these results did snap its 5-day winning streak, despite the fact that, all things considered, their net sales did grow about 1.3%. This did miss the street's expectations, but all in all, we saw that figure actually, without sales, would have risen 3.5%, which then would have topped the street's expectations expectations. So important to decide which metrics you're sort of looking at here. They did say their gross margin rate improved from a year ago due to some of these lower supply chain costs and the effect of the terminated agreement with Express Scripts, which had been weighing on the shares. They also saw higher shrink and more promotions this quarter, which then did lead a lot of analysts to believe that was part of the sales miss overall. However, I think that the good news for a lot of these grocers is the fact that inflation at restaurants has been running so much hotter as of late. We actually saw the year-over-year price increases for food away from home exceeded food at home for March, April, and May, according to the Bureau of Labor Statistics. So that to me is fascinating. We're actually seeing food at home prices rise about 6% on the year, while food away from home prices are up over 8%. And I always find those metrics so interesting to see how they're playing out in our everyday lives, Alex. But this is not enough to boost shares today, clearly not enough for the street here. And I was reading an analyst note that just said these results just simply were not good enough.
It seems that's the case. Stock down almost 4%. Really, the only thing you can put your finger on is lackluster quarterly sales. Obviously, missing on that revenue side is disappointing, but it wasn't that big of a miss, is what I mean, you're talking about a company that operates at a relatively low margin, $45 billion in revenue, and at least the numbers that I saw, they missed by 70 million. It's not even 1% or something, and the stock is just getting pummeled. So kind of goes to show, too, I think the street expects beats. Expects relatively, some of these numbers that are relatively conservative given things that's been going on, and in some cases maybe some of these estimates have been lowballed to some extent too. So gonna say downvote though for Kroger. Obviously we've already heard from the earnings announcement. We'll talk about it more, I'm sure, in about a quarter from now. This is, to me, the story of the day. We talked about this on Morning Trade Live. It's kind of an interesting kind of assessment by Citi in regards to American Express, because this is just going right in the face of everything else that everybody else is saying.
I know, celebrating, I was like, come on. Like, I mean, I was reading this note thinking the same exact thing here, Alex, but Citi did lower its price target on American Express to 148 from 150 with a sell rating on shares, which is something you do not come across very often. They did say their credit card data spending trends showed travel and entertainment growth has slowed sharply from recently strong double-digit growth rates. The firm expects this will be the most negative for American Express, as it does have a higher level of travel and entertainment spend within its customer base. They did open a 90-day negative catalyst watch based on the fact that American Express will report slower than expected purchase volume growth. They said this may then reset the overly optimistic revenue growth expectations for the coming quarters and into 2024, they believe. But here's the thing, and they highlight the fact that we are seeing travel and entertainment spending slow. All we've heard about from airlines, hotels, Airbnb, I mean, even names like Uber, the cruise lines, is the fact that we are seeing these summer months really pick up and even exceed the street's expectations. So how could they possibly say that per this one data or this one survey that they found, that is just not the case, going against all of these companies that are sort of an overwhelming consensus here?
I think that's the most interesting part of this whole thing, is they acknowledge that. They say it has been strong and it's not now, and it happened fast. So macro read through here. Obviously, they're giving us kind of their thought on how to, take this information if you believe it or subscribe to this particular data point that Citi's providing. They're saying American Express is a way to act on that. So gonna say upvote here. We can talk more about American Express, but to me, this is much more a macro story. We've been looking for signs of economic deterioration. We've been hearing about recessionary situations. We've been hearing about all these things. Well, it's going to start with consumers not buying things or not going on trips. And if this is the case, I mean, that's essentially what this data is saying.
I respect, I guess, the bold claim, but gosh, go to an airport or try booking a flight and it would make you think that everyone is traveling.
Well, when would you have bought those tickets?
I guess that you would probably about a year ago at this point, or just in the last few months, at least at this point. But interesting take, so we'll definitely be diving more into that American Express story with a sell rating, as well as Nike with its earnings event still ahead. We'll be looking at the technicals as well as some example trades in both of these names. Stick around. Next Gen Investing will be right back.
too. We had a 5.7% gain, this nice big green candle that closed near the highs of the day. It took us above our volume profile point of control and our yellow 21-day exponential moving average here. Today, it's a little bit of a different story here. We touched our 21-day EMA. It looks like that support did hold there. Our moving average is starting to turn up, but we're on pace for what's called a harami candle here. And what that means is we have the difference between the open and the close in our previous candle, and then today's distance from the open to the close is completely encompassed by the previous day. So that's a sign that the trend is perhaps stalling. It's a sign of kind of indecision and lack of movement there. So not a good sign what you'd want to see right after a big move upward there. So our moving averages, yellow 21 days starting to turn upward here. Possible early sign of trend change, but our two longer term moving averages, our orange 63-day and purple 252-day, those are still trending sideways to down really. So not much help in those, in those for the longer time periods here. Momentum, our RSI, also not the most positive thing here today. We are very, very slightly above the 50 line. That's the line that demarcates bearish momentum from bullish momentum. We're just a hair above that 50 line there. So that is worth mentioning at least. That's a bullish signal when it crosses above and closes above that line here. But given the price action today, we kind of got to wait and see. We could still fall off heading into the close, and that could be erased here. That's a good reminder too. You really got to wait for the close with these technical indicators. They can cross over during the day and then cross backward. You can get a lot of false signals. It can be a very frustrating thing to have happen to you as a trader. So it's good to wait for the close and make sure that the signal actually does play out full capacity there. So in terms of support and resistance here, the 21-day EMA is support, our yellow line here, right near the 110 mark. That's going to be a good place to watch for some potential support. Below that, we've got our volume profile point of control, this thick red line near about the 107 mark. To the upside, 63-day EMA comes in just below 116 right here, and then we've got a small gap that started around the 117 mark, this red dashed line right there. That could be further resistance.
Yeah, Rick, I think a really good takeaway there, sort of be patient, wait till you hear that closing bell before you go into one technical indicator, really with some strong conviction. But I guess the one thing that Nike does have going for it is it is not yet reported its quarterly update. And I will say that Lululemon did look a lot more like Nike on a chart perspective before they did report its quarterly update. And then we saw momentum sort of shift. So we do still have that catalyst at least to look forward to here. So Alex, now when trading this name, I think with that in mind, the fact that we could see any sort of reversal in what has been a pretty lackluster trend, walk us through the name more bullish leaning example trade.
Yeah, so maybe investors kind of come together and kind of have that same opinion you laid out, where earnings could be a catalyst, and maybe before that you ever even get to the earnings, there's a little bit of a rally in the stock kind of preempting that. And so I looked at a strategy that will actually expire before we even see earnings. Just goes out the next Friday, buying the 110, selling the 113 calls on this one, creating a call vertical, seeking to spend about half the width of the strike. So $3 wide spread, $1.50 debit would be one half the width of the strikes exactly. You risk $150 to make $150 on this strategy. 111.50 is the break even, which is exactly where the stock's trading right now. So it hits a lot of those kind of points that we talk about, which is break even relatively close to where it's trading, equal risk to reward. And then with this one, it's a relatively short time frame. That's by design in order to eliminate that added volatility surrounding the earnings event. For someone who is less concerned about that, doing something in an expiration date that would capture that earnings event may change the pricing profile of some of this, may change how the strategy reacts in the near term. But there's certainly nothing wrong with that, especially if you have conviction on what those earnings will or won't do for the stock. But all in all, pretty straightforward risk profile. Fall below 110, that's max loss. Go above 113. Go through assignment and exercise. That is the max possible profit on this one. Equal risk to reward. Bullish strategy, very, very short term.
Okay, now to get into this American Express story, because I have all sorts of feelings, but I actually will say that I was just looking at the other analysts that cover this name. It's actually not as optimistic as I would have thought. Of the 9 analysts that do cover this name, we are seeing 4 that are neutral, and then we see 3 that are leaning actually more bearish, and 2 that are somewhat bullish, but the conviction on this name is not as strong as I would have thought, Rick. So walk us through the technicals here, because I do know Citi gave that $148 price target, which implies some further weakness, down about 14% from where we're currently trading. So suddenly I'm a little bit skeptical on American Express.
Well, the chart might kind of support this little bit of skepticism here, because we are falling below a trend line that we established, a steep trend line going up across this area right here. We're below that point now today. But just backtracking a little bit here, we can see that we've faltered a bit since we hit these highs near 182. Since that point, we've been trending downward in a broadening triangle type pattern, also called a megaphone pattern. This is typically regarded as one of the more difficult patterns to try to trade. You can see these 2 blue dashed lines are diverging apart from each other. And you know, the reasoning behind that is your targets are moving farther and farther apart from each other. You run an increasing risk of being caught in an adverse move to your position. It's just a more difficult type of pattern to trade in general here. Nevertheless, we have some support and resistance to keep an eye on here. One level that stuck out to me was the 166 level, this green dashed line. That's about where our gap started here after we had earnings. And that was also a point where price topped out a few times here and here. So that was a point that caught my eye in terms of support here. If we do start moving to the downside further, which seems like it could be possible given our RSI here, our measure of momentum, our RSI is crossing out of the overbought area. That's a bearish signal here. And when you couple that with a break below a trend line and this cross below the overbought area, that could be the path to further downside here. And the 166 area, another thing is that the 21-day EMA is coalescing right in the same level there. We got some confluence of our two technical points of interest. So the 166 level is a place to watch for some support. To the upside, if we do keep trending upward and recover a little bit after today's break below that trend line here, the upper blue trend line here could be a place to watch. We could retest that one once again, coming in near maybe the 175 mark or so. Just above that, we've got our old highs near 177. So a few points to watch there. And our moving averages still trending upward overall, still not seeing any major signs of trend change yet. Just a few things to note that could be more bearish.
Yeah, and Rick, it does seem like the street agrees with you, because the average price target right now among the analysts covering this name is around 168, and you highlighted that $166 level as an area of support. So
can't believe I covered up Jenny the whole time. What was I thinking?
The fact that these analysts see no further optimism for the next 12 months, I mean, suddenly I'm a little
Eyes written back up.
We will leave it there. Appreciate all of the technicals, as always, Rick Ducat, our chart master. So Alex, now in trading this name, walk us through a bearish trade, I guess, because I'm concerned now on the overall travel space and, of course, consumers' credit, that it does seem like there is consensus that there are some reasons for concern with American Express.
Yeah, and I kind of took this along the lines of, let's just say that Citi is sort of seeing this before someone else. Let's say that this is sort of a first look at there being some concerns, and ultimately, let's say that this even becomes a greater story. If you have access to that information before others do, you're probably going to be early to the trade. You're going to need some time for the rest of the market to come up and catch up to that basically opinion. This is still a very counter kind of opinion in general, maybe not in American Express in general, but in general of travel and entertainment expenses trailing off. And so say you're looking at American Express, you see weakness ahead, but you want to give it some time for that to happen. I looked at a strategy that would benefit from a move lower to around 150 over the next few months. And I looked at buying a put calendar, selling July, buying August, and the risk on this trade is going to be the debit spent. In this particular case, it was a $1 debit, so $100 in risk. But this also is a super customizable trade, as we've talked about. Like, this is one.
GME taking a green market.
The exact analyst.
Why was GME ripping?
Was 148. They were at 150 before.
I'm just kidding.
So sort of coincides
I don't know.
with that, but
there was maybe a little bit of a share the news in the shareholder meeting, or sell the news. Share the news, sell the news.
We've looked at the put calendar or the call calendar. Precision is almost more important than direction. So The stock right now is trading just under 175. It's going to need to
Hearing about stocks 5 days a week?
$25
I don't.
to get to 150. Doesn't
That's
have to
awful.
perfectly get there, but you're
Hey
probably
Archer,
gonna
you're not
have
kicked
some
out of the
downwards
channel.
movement and an expansion of
Congratulations.
implied volatility for this
Generac
to be
is up a little
profitable
bit.
trade. And so for
0.2%.
those who maybe have a different outlook, something in the call calendar family to the upside, or a more neutral put or call calendar may better reflect their particular outlook. Nonetheless, though, $100 in risk will benefit more than likely if this stock does find some deterioration and works its way towards 150.
I will say that with this news today, shares aren't necessarily selling off. They are only down about 0.8%, all things considered. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are previewing all things Adobe ahead of its second quarter report expected today after the closing bell. Shares up about 1% now into that report.
When you put recommendations out here, your presence at risk. Presence is always at risk. This SPY just bull flagging up here. Thanks, Kitty Daddy. Thanks for your support. Think about it when not. This is the way. Barbecue might get a little late day pop here. It's 1 o'clock, or sorry, 1:30. Let's see what happens here. also have lips.
They're acknowledging that the supply of homes is very tight, which is going to be a good thing for their business.
The spy.
They had to adjust
Beautiful.
prices in order to get some of the inventory off of their books, but they are seeing a light at the end of the tunnel when it comes to this new interest rate environment, and they do believe that the consumer is going to hold on for now.
Kevin, so walk me through how Lennar fares compared to its home building peers, because I was excited to see shares up 30% on the year, and then I looked at some of the others like a Toll Brothers, a KB Home, a Pulte Group. I mean, Pulte Group is now up over 62% on the year. KB Home's up almost 60%.
I cheer for Pulte? I don't even know. Or is he our friend still or no?
That dwarfs the 30%
When's he become an enemy?
we've seen in Lennar.
Spy just double
what does
bottom
the
there.
competition look like
And
in
up a
that
nice
space? Because
little
I know they do
Batman
offer
ears.
their respective price points
As a
for
joke.
their housing offerings.
Yeah, so I would say for Toll Brothers, you're looking at a higher end consumer when it comes to homes. Usually, those individuals that are buying Toll Brother homes have already had their first home or even their second home, and so they have the cash available in order to buy those homes. They're really close to almost $1 million for their average sale price. I think it's at $980,000 based on the last earnings announcement here. So obviously, we are looking at a lower, like a mid-tier type of consumer base when you're looking at Lennar, and when you're also looking at other home builders that are out there as well. So I think right now it just depends on where you are building. Geographic location is going to be very key in this marketplace. We have seen continued growth when it comes to those southern states like Florida, out here in Colorado as well. If you're looking at the south, we've seen some growth there. But if you have a huge concentration
Colorado?
in some areas in the Midwest, we might not see as much growth or as much sales volume here. So I think that's also going to be the key here. The price point is going to be key. And then you're also seeing a lot of these home builders actually paying down or trying to provide pretty aggressive incentives to get buyers into homes. So they might
You're going for a triple top here on the Spy.
a lot cheaper rate. Obviously, that hits them on their bottom line there. But once again, it kind of just depends on the price point for the consumer and the consumer that you're trying to target, depending if it's a higher end consumer or more mid-tier.
All I know, Kevin, it's never been more clear to me that I'm probably going to end up renting forever, because right now the housing market, at least here, and I'm sure
Jenny.
you are as well, just feels like it's so competitive.
And
Buying in cash. I mean, it's just a ridiculous market. So I hope things do alleviate, at least for us as consumers' sake. But we'll leave it there. Appreciate the insight. Kevin Green, Senior Markets Correspondent for the network. Now I'd like to bring back in Alex. And it's time for FOMO. We are looking at Adobe ahead of its quarterly update today after the closing bell. And Alex, I will say that I don't think we've ever talked about Adobe so much. After its news we got last week following its summit and its push into AI, Adobe has made the case for being a really interesting name to cover this year.
No doubt. It seems pretty well timed that all that news did come out about a week ago, because everything I've looked at is basically painting a story of decelerating growth and a story of maybe you'll see an earnings uptick, but largely due to shareholder-friendly activities like stock buybacks. This is not particularly a strong year, at least thus far, for Adobe. But you mention AI, your stock looks like that.
Yeah, so to speak to that, shares are up 42% since mid-May. So you're right, a lot of the gains, if not all the gains we're seeing on the year pretty much, have happened just over the last month and a half. Of course, as investors have gained some faith that generative AI will be enough to really propel Adobe shares higher, there's also a lot of thinking that the status of their pending $20 billion acquisition of Figma will be in focus on this earnings call, or any sort of update regarding that acquisition. Now, in March, a week after its most latest earnings report, Adobe did announce the launch of Firefly, which is a generative AI co-pilot that does use the language models that is from OpenAI's ChatGPT, of course. They did launch a website to give people the chance to try the tools, including text-to-imaging software that is, again, offered by OpenAI. They've also unveiled new generative AI features for Photoshop, which, of course, is one of their most prized offerings. And earlier in this month, actually, they did announce plans to offer the commercial version of Firefly and then now charge for it. So meanwhile, they vowed pretty aggressively to defend their pending deal for Figma, which is facing regulatory scrutiny in not only the US, but also the EU and the UK. Earlier this year, there were reports that the Department of Justice didn't intend to file to block that deal. So we will wait and see, obviously, any sort of clarity on that from the company's management. But a Jefferies analyst I was reading did say that they believe that given the more resilient economy we're seeing today, they do expect that the solid checks they've seen in Adobe will play out sort of as the street is expecting, pretty optimistically. He does agree that the bigger focus is still at this point on AI and Figma, less on their top and bottom line. But again, any sort of clarity would be welcome just given the run-up we've had in shares. I mean, we're up now 17% on the month, 7% this week, 45% on the year, but over 40% of that has just occurred over the last month, Alex.
I think that's what complicates things. Obviously, when you look at it on this 3-year time frame, it doesn't look like you're buying something that's done particularly well. Obviously, it's been a little bit more sideways on that time frame, but man, if you're just looking at it over the last couple of weeks, it seems like you're
Fine, going for it. It's 130.
You know, the next up and coming
Why wouldn't it keep ripping?
Biopharmaceutical company. It's been that impressive of a really of a rally in this name. So much of it tied to AI, which we know is sort of the on-trend thing right now for these companies to be talking about. Adobe does a lot of things right, obviously. We've talked about it a lot. They're sort of the pioneer and really the mainstream company that really got software as a service and that model, subscription-based model, to really stick, and it really changed the game in many ways that allowed for more consistent revenue streams and also a little bit more affordable options for consumers, so sort of a win-win. But given the fact that the stock is still way off those highs, combined with the fact that it's also now suddenly way off its lows, I think this is a little bit more of a complex spot than a lot of these names.
I do too, because this name doesn't necessarily, I'd say, warrant the same FOMO type feeling for a name like Tesla or even AMD or Nvidia, because it does feel like you look at it and you zoom out, and it doesn't necessarily paint the strongest picture. I know it has seen shares rally as of late, but I think all things considered, this name's still well off of its all-time highs, like you said, Alex. Now, one area that is expected to be really, really key for this company is its digital subscription business growth, which is a very closely watched metric. They've really been pushing into their subscription model and going into the cloud. That's something that's very, very much loved by the street. But at this point, I would say we're sort of up 7% on the week into this earnings event. Difficult to gauge here. So walk us through what you're thinking for an example trade. I mean, the analyst price targets on this name as of late are so out of control. They're like over $530, over $550 a share, which is, I would say, would imply some serious upside from where we're currently trading.
$35 market maker move. So we know that's not a target. We know that's not a guideline or a limit or a boundary, but it's just simply a 1 standard deviation range generated by current volatility and option prices in the stock. Well, that's going to say we just use that for conversational purposes, that was sort of an idea of sort of where the market's pricing the risk. You're talking about 515 or so to the upside, and you're talking, let's call it 450 or so to the downside. So it gives you an idea. There's a $70 1 standard deviation range. Can certainly outperform that, and it can certainly underperform that, but there is uncertainty in this report. Obviously, they've kind of expended a lot of their optimistic message just recently with their kind of AI conversation. So how much do they lean into that? And there's always a chance that they just have really, really strong numbers, or of course on the other side, maybe really disappointing numbers. How is the street going to react? From seeing that volatility, not 10%, but on the the closer to 10% than no percent. Obviously, there's an uncertainty here, and the street is on edge as we see what's going to happen.
Yeah, and I would say they're in somewhat of a precarious position into this earnings event because they're pretty much the only big tech name that's reporting this week. So there are
Mullen did get interesting today.
on this report, given the fact that they are one of the
normal
last men
reverse
standing
split
left
squeezy
to
stuff. I
report
don't
here.
know.
So when trade, I mean, like Alex, walk us through your thinking,
Kinda
because
weird.
I just feel like considering there is this definitely hype around AI, which they do have a push into, but then there's the concern of what does this Figma deal look like, and what does exactly their AI offerings look like, and also the fact, like you said, we are right around our 52-week high, nowhere near all-time highs, but also the fact that we are now up almost 80% off 52-week lows.
So what I looked at here was we have an earnings event. So you have really, really inflated implied volatility, and you have uncertainty. At the same time, you have a name that's fallen into the AI camp. We know the feeling of missing out is to the upside. So how can we combine that recent rally, the hype, and of course this earnings event all into one thing to reflect what maybe a particular individual may be thinking about this name given its earnings event, given the optimism. So I looked at a neutral to bullish strategy, skewed put butterfly. really leaning into this volatility, creating a high probability of success. Buying one 455, selling two of the 450s, buying one of the 440s. All of this expires tomorrow. This is a true earnings trade. And so if you did this for, let's say, a 50-cent credit, might not be there now with the stock rallying a little bit from where it was before the show when I was looking at this. Essentially, if it stays above where all these options are out of the money, you would just keep your credit. So $50 on $450 in risk. However, it gets quite interesting if it does start to sink a little bit lower. It's got an omnidirectional component. You can see it can peak out with as much as $550 in max gains. But really what sticks out to me and what I think most important about this is the break even is 444.50. So 444.50, that is way, way below the current share price. So over $40 below the current share price. You're gonna need almost a 10% move for this to not be above theoretical break even with 1 day to expiration. So more about the high probability of success, very, very short time frame, and this being solely basically surrounding this earnings event.
And of course, a relatively higher price tag than some of the other names we frequently discuss on this show, just trading at below $4.89 now as shared this earnings event. But we will keep those numbers on our radar, of course. That does it for our FOMO segment. But coming up next is a name that could be also a FOMO type stock. That is all things Tesla. Snapping its winning streak. Shares are slightly lower now on this session after 13 straight up days. We'll discuss that more with Ben Lichtenstein coming up next.
Lichtenstein. You guys got kind of caught up there with stuff. And you said, doesn't someone, like his son or someone, own Pulte? Isn't it still in the Pulte family? US Open? Tennis? Which US Open? Yeah, finger up 14. Well spotted. GR. Is also moving up. Golf. Oh. There's like a US Open of like every sport. No involvement besides on some shares. Oh, really? NRC will get his time, right? Right, Archer? Right? New yearly high on SPY. Congratulations, those who dip bought here. Seeing the double bottom. Seeing the same sort of buying continuation going on. Barbecue's up 7%. Failed drug trial. Out. Yeah, you were getting delayed data, by the way. You hadn't you hadn't signed up. You hadn't agreed to the disclosures of of getting real-time data on the options, the equities. Everything you were getting was 15 minutes late. Yeah, it was right there at the top of your account in big yellow letters saying this is delayed data. Which isn't a huge deal for what you were doing, but it's a good thing you didn't progress any further with that. Yeah, I added expirations to help you organize a little better. Sorry, yeah, that was a phone call. I didn't toggle the mute. Barbecue moved up a little bit there though, 9%. You can get over 20 cents before Friday. Flip it into support. My alt shares are plus 0.14%. I like this chart on alt tree. Maybe we're a little early, maybe, but I think you could wake up. And then that other one you mentioned was nice also.
Which is valuation between somewhere in the $3.5 to $4 billion range. Now, one thing about Kava is it's one of these up-and-coming competitors.
Leveled out at 41 bucks there in Kava.
Fast casual space, much like Chipotle is in the Mexican food space. If you look at the financial profile, it's a little bit difficult to find information on it. But one of the things I did notice about the business is since 2016, it's grown significantly. But one of the things about its growth, with 22 stores back in 2016, it has about 263 stores as of April of this year, but 145 of those stores were inorganic acquisitions. They bought a company called Zoe's Kitchen back in 2018. And the other thing is the company is expanding aggressively on a forward basis. They're expected to increase their store footprint to close to 1,000 stores, or 4 times their current existing stock of stores by 2032. Growth expectations for the business, quite aggressive. They're expecting 25% compound annual growth rate between now and 2027. But I think the challenge for investors right now is trying to determine profitability. I went and looked at last year. The company itself burned through about $120 million in cash and is still not profitable. So this may be a situation where, unless there's a financial profile that's established in the next couple of quarters or so, I think from the standpoint of reported earnings, it may be a situation where there's a lot of hype around an IPO because of the fact that they have been very slim in terms of the offerings as of late.
George, obviously the IPOs and any way of going public, be it SPAC or other potential direct listings, hasn't been friendly the last few years. I was just looking at Sweetgreen, for example, since that was the one that Jenny had mentioned. Stock's down like 80% from its highs. So you start looking at some of these names and you wonder, sort of early stage. I know it's aggressive.
I broke that high. There it is. Dang, I got all caught up on the phone. I did want to flip this short to long. I barely was able to. Dang it. I was able to close this short, but I wasn't focused enough to go long.
Is there something here where a little bit
Couldn't
of
quite tell if that was it.
is hitting a
But yeah. Okay. Not giving back gains, so happy about that.
Conditions. I mean, there are some quality stocks that are moving higher, but you're also seeing, again, some of the non-profitable elements in the technology space and other areas
So
where
squeezy.
are still not profitable, but they're moving higher. So I suggest, yeah, there's probably some element. I can't determine exactly what percent, but there's an element of speculative fervor going on, I think, in the markets right now, and I think it's also carrying through to this particular name based upon the opening price, which was essentially about $20 higher than the expected offering price of $22 a share. So,
Look at that thing! Wow.
I haven't eaten at this establishment. I haven't been to one. I can't say
Over 1% on SPY there.
Product, but I will say
Proper squeeze going on.
They do have a tremendous growth opportunity.
The momentum that this SPY has right now.
Mean that the stock price will grow right away. I think if you look at the offerings, this is at $22. They were expected to raise about.
This is when you start getting big gaps and goes.
On the $22 share price, with the full allocation being close to $2 to $2.5 billion.
Just no shot
again,
for
like I said,
sellers.
the price at $22.50. So
or $4.50.
They have the ability to issue a lot of shares, and that's going to again put pressure on existing shareholders, and they're going to spend quite a bit of money to grow their business. One of the things I did notice also in the report is they're growing their businesses, but they're also going to grow them with drive-throughs. Now, drive-through businesses offer again other ways for people to make purchases.
Those
But
are
they're
big
they are
gaps, not.
expensive as well. So, in my view, in the past, I usually will allow or like to reset or kind of look at these kinds of situations or IPOs after the first
It's
couple
crazy.
of quarters of earnings announcements.
Yeah, Georgia, I was actually tuning into Trading 360. Nicole Petalides had the CFO on, and she was outlining this 15% target rate for their growth in terms of stores, meaning we could see over 1,000 locations in the next decade. So perhaps then we would all get to go to one, because I think that we all collectively need to go try now one of these restaurants. But we will leave it there. Appreciate the insight, George Tillis. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
Reverse split on Boyle? Oh man. Thought nat gas had been selling off. Yep, Nicola's little reverse split squeeze too. Okay, finally got a head and shoulders there again on the SPY. And an engulfing candle. Guys' dates are hilarious. I'm wondering if small caps are going to catch up with this SPY rip. Meaning GME. Tasty STI, thank you for the coffee, man. Cheers, I appreciate that. I actually was out getting a coffee and I was like, wait, I don't need it today. I shouldn't. If I don't need it, if I don't feel dragging it, try not to drink it. But you did just send over that beautiful dono with the coffee. I just have to now. Thank you, Tasty. Appreciate it, man. Breathing the same air as the rest of us. His degree in banking finance? No. Banker family? Sounds fake. Made up.
Let's get nuts!
There it is. Better late than wrong.
$43.99, almost at 44. We had the CFO earlier today, live at the New York Stock. Stocks up.
I did take the short up there, by the way, on the futures.
Exciting day here. All right, welcome back to the watch list, everybody. I got some big names for you to watch in the AI space. So let's bring in Hatem Diab, managing partner, Gerber Kawasaki Wealth and Investment Management. Good to see you. So you're talking about super momentum. All right, so what does super momentum mean, and why is NVIDIA the leader of the bunch?
Hey, Nicole. I mean, I've never seen so much excitement around the technology, which is AI. I think every company out there right now is trying to figure out, do they have an AI strategy? What's their AI strategy? How can they execute on it? And all roads basically lead to NVIDIA. So that's why everyone is buying into the stock despite this really insane valuations.
Yeah, without a doubt. I mean, the stock's up 195% year to date. NVIDIA, you remember, was a darling a few years ago. It brought the NASDAQ to new highs the first time, and it's doing it again here to new 52-week highs. What parts of NVIDIA are working well in your mind? And it is a competitive landscape, but NVIDIA certainly seems to be a big leader.
I mean, the data center story is really front and center. NVIDIA has been a darling, as you said, for many, many years, and they kind of reiterated over the years as to what they're going to be part of. And I don't I think back in the day there was cryptocurrency, and before that it
Are you
was
claiming AMC
more
dropping?
so video games. But I think the data center now is really the biggest story, because there is over $1 trillion worth of data centers that need to move from CPUs to GPUs.
Yeah, Ape is popping up
and
there,
this is called
3.5%.
accelerated computing, and really NVIDIA is basically the only game
Don't they
in
have to
town
like
there.
be matched at some point?
I see. All right, let's get to Tesla, which had 13 days, had a winning streak. It was ended in
And
13 days.
barcoding.
But what a run it's had. You know, I saw a great interview with Elon Musk, and he really was alluding to the AI technology of Tesla. And even when people were talking about ChatGPT and OpenAI, I mean, he basically said, well, you should see Tesla because the cars are driving around by themselves. You know, alluding to the fact that he's got the best AI. You're saying Tesla's not even given enough credit.
Yeah, I mean, first of all, Elon
The weird
was a
bullfly
founder of
being built?
OpenAI,
I
right?
don't
So
know.
he was in this
Maybe.
before everyone even was thinking about AI per se. But as you said, yes, I think Tesla has been training its models. AI is really about training and data, right? So Tesla has been using cars in the road for the last
Its
5
spy
years
is so squeezy.
and really generating so
That's
much
crazy.
data to be able to train these full surface driving models, or its AI
Bulls are out
models.
with a
And I
vengeance.
think as a result, people don't realize how
No
much
quarter.
data Tesla has and how much far ahead they are
No
from
quarter
everyone
for the
else in the
Bears.
space. So I think you're going to see some really, really interesting, exciting stuff come out from them, maybe towards the end of the year or next year.
So with these two names that we just talked about, you still think there could be some upside potential here, but they've run up, I mean, a lot. Still not at the all-time highs or things like that, but certainly a run up. Were you surprised to see Cathie Wood of ARK trimming her investments on Tesla and NVIDIA while then reallocating and picking up names like Meta and Taiwan Semi?
I was really surprised that Cathie would sell NVIDIA in Q1 this year. I think if anybody is investing in innovation, how can you not own NVIDIA? Now, where to buy it, that's a different question, right? Like, valuation is definitely not cheap. People are excited about NVIDIA, but maybe there is an entry point that is a little bit better than where we are today. It's never good to be chasing stocks. With Tesla, I think what people are realizing is the sum of the parts is actually bigger than the actual value itself, because with opening the supercharger network, we see how valuable that network has been and how important what they've built from a charging standpoint is. And I think that's really a realization that wasn't there before.
Right, understood. Okay. And then can we get to Alphabet? You know, it's my understanding that Alphabet is not just Bard. There's a language model that is AI driven, and there's a lot more that we should be looking at.
It is over 1,000 hours of videos that get uploaded to YouTube every minute. So I think when you think about the biggest data set of imagery and videos, YouTube is by far the most important place. And guess what? Google owns YouTube, and they're training their models to use some of that data that they have in YouTube. So you can think of a world where Google, who's already been at the forefront of AI, using that
There's already a
for YouTube and all
SARK
that data they
ETF
get from that, as
conversing her.
creating the next wave of generative AI tools and processes.
Mullen's
So I'm
up
very bullish
10%.
on Google, and I think it's also fairly valued at this point.
Right. I mean, it has its own AI accelerator, as you noted, with YouTube and acquiring all this data. And, you know,
Oh, do you work for Meta?
these three are ultimately some best AI bets. I mean, did you have a fourth that you left out? But are these three the best
Look at that
AI
volume
bets
on Mullen
and still
today.
have
That's
room to the upside?
insane. What?
I mean, Microsoft is definitely another
347
company.
million?
Everyone
What's
knows about
happening?
it. Everyone owns it at this point. But I think what you're looking is like any new innovation or any
It always
wave
goes
of
up.
innovation.
That's
These
all-time
are
high
gonna
volume
be
on
the
Mullen
top
today.
players, but you're gonna be
Like by a
watching
long
for
shot.
smaller players that are gonna come in
What
and
happened?
help create some additional tools. So you can think of Adobe,
Something
you can
weird's
think of
going on there.
AMD, you can think of other really companies that they're building some really cool stuff that's based on this really cool technology.
Thank you so much. Hatem Diab, thank you. Great to see you. Gerber Kawasaki Wealth and
The
Investment
data center.
Management. Thanks. All right, coming up next, reasons Boeing could have some room.
When's your
to
lockup
run.
window end?
Could it grow?
I know, I'm kind of wanting to get a position on Mullen with all that volume. Just based on the volume alone. Seems like something cool is going to happen. August. Whew. Hope the market holds up for you, man. June, yeah. That sucks. Squeezing up more. I close out my short, by the way. Alone.
And there's strong demand for commercial airlines, especially in China and India. And we're expected to see increased travel at over 4% a year. And really, there's only a duopoly.
Thanks, controls guys. Sounds good. Sounds good, man.
I think we're going to
For
see
310 August, huh?
very, very well.
All right. You know, you're not concerned about the
Look at that move it's made. That's crazy.
to get in your way?
Well,
yeah, I don't think 310's out of the question.
I'm not too concerned right now.
Market looks like it's still squeezing.
Right.
But by August,
things have to change. I mean, you have to see what the Fed will do too. What about a name like Match Group? Fundamentally, what do you think about this one?
Well, I like it fundamentally. It's one of the stocks that I'm looking at.
That's a big breakout today on Meta, actually.
Real move off of the 52-week low, and there is some momentum here. The stock is
got a gap fill to 316.
Where it was trading.
Distance starting at 289.
It's an industry leader, obviously, in the online
Why is not going
gaming.
anywhere, man? This thing's only going up.
Tinder and Hinge are their leading apps, and there's a lot of excitement going on with what's going on over there. There's a lot of momentum with the stock, and it looks like overseas there's a huge untapped market, and basically 75% of the market overseas is untapped, which I think could be a huge growth opportunity for a match. And
New high of the year on SPY.
And back in 2020 during the pandemic, they got, I think, 3 billion swipes, which is pretty incredible. So people are really looking, at it. I also think lower inflation means that more discretionary spending. And I think that the stock should do very well. I actually think that this stock could possibly double in the next 12 months.
Yeah, I saw that. I mean, double. You think it may double in the next year? That would be something. Yeah.
I think off of where we are right now, I think there's a good chance that's going to happen.
He's SPY. That's crazy.
What about Boeing? Where do you think that one's headed? I mean, how quickly could that one go higher?
Well, I think Boeing may have another 20%. Back in November, I thought the stock could go 20 to 30% in 6 months, which it did, and I think we probably got another 20%.
442,
Boeing,
17 on the SPY. Still squeezing.
Okay. Andrew, great to see you. Andrew Aarons, the beginning of the new bull market. Appreciate it. Synergy Advisory Management Group. Thanks. Still ahead, we're going to take a look at C3AI. Those shares are jumping. Some unusual options activity. Let's check that one out on our radar. And here are some winners and losers in the S&P 500, which is at 52-week highs.
Must be almost special. Yeah, pretty much. Liechtenstein,
Yeah,
huh?
I think most of it's being seen as positive at this point. Nicole,
Highs still squeezing.
reversal today. You mentioned
Yearly
green arrows across
highs.
the board in all
We've
four
made it.
major indices as
We've
we
done
move
it.
into the afternoon session. A reflection of investors really kind of discounting the negative, focusing on the positive. Big green arrows to the upside, right? In 3 of the 4 majors, more than a 1% gain. And I just want to point to, well, there you can see all 4 of them. The only one that's really lagging a bit here today, I don't even know if you call a 0.5% gain a laggard at this point, but the Russell still holding below 1900, all 4 above the 50, all 4 above the 200-day moving average, and convincingly at this point. I mean, this has been quite the run-up. Let's dive into the intraday price activity because the S&P has actually started off. The futures began slightly lower after Asia closed very much positive overnight. So this is really just continuation of that right now. The reversal we've seen, the Hang Seng up over 2% yesterday overnight, the biggest gain in 3 months. China CSI 300 advanced more than 1.5%, the biggest move this year. And so I was a little bit suspect to see stocks lower here into the cash open, but they reversed quite a bit as the dollar came off, rates came off. Here's a look at the run-up we've seen today. We're talking from, well, 4,400 all the way up to 44.70. A big day to the upside here. Taking a look at the move up we've seen in futures this month relative to last month, you can see quite the move off the lows from last month down around 40.50, Nicole. We've basically added on 400 plus points into new highs for the year. A big move up not only in the S&Ps but also
by
NASDAQ,
squeezing.
now new highs for the year.
Oh.
As I mentioned, the 50-day moving average. You can
What
see the
the
retreat,
heck?
how we haven't been below it since the end of March. All of this bid activity, the optimism
Dude.
I mentioned here, the focus being on the
This
positive,
is like
discounting the negative has the VIX
post-COVID
coming off.
squeeze.
Look at the volatility. Now, this is the futures, the index down below 15 to 1455.
Wow.
Taking out last month's lows and not looking back. And then here's the index back to levels we haven't seen since the beginning of 2020. Nicole, I mean, this rally is for real at this point. There's got to be some follow through to really
Yeah, it's for real.
gain momentum here at this point. Taking out some key levels though, and
Just no pulling back though. It's gotta pull back, find some support somewhere, sometime.
Nicole.
I mean, I don't mean intraday. I mean on this daily time frame. Like this is.
All the way since way back in March. And the truth of the matter is that, you know,
We're probably looking at something like this for the next month.
Is the Fed done? Is this the longest bear market or rally, bear market rally, or is it a new bull market? And, Andrew Ahrens just came on and said, new bull market. I mean, that's where he was coming from. Let's get your thoughts. I mean, the ECB raised by 25 basis points. That was what, folks were expecting that they would, but maybe after the Fed paused, maybe they would have paused. Nope. To highest rates in 22 years. Where did that fit in here in our neck of the woods? Why does that matter?
Well, it matters because while the ECB was a little bit late to the party in terms of raising rates, it's now their 8th consecutive rate hike. You mentioned here basically 22-year highs in terms of rates, and more to come is what I think is really significant here, and I think what the market is focused on. Taking a look at some of the selling in the U.S. dollar, I mentioned rates coming off here today, Nicole, so I think you can chalk some of that weakness in the greenback, as you can see below the 102 handle again today, down to 101.71. But you can also chalk some of the weakness we're seeing in the U.S. dollar to, well, some of the selling that we've been seeing in the, I should say buying that we've been seeing in the euro currency. This comes in reaction to strength tied to the ECB, comments from Christine Lagarde, the rate hike, the Fed leaving rates unchanged, the skip, the pause, whatever you want to call it. Recently, the BOC moved from a pause stance into a rate hike, if you remember last week. And hey, keep in mind, here's a look at the euro currency, which is at a big day to the upside here today, nearing the highs that we saw earlier this year up around 112. So let's watch the dollar if this continues those lows that we saw this year around 101. I want to point out a couple other products to watch. Look, the yen, which is kind of balancing out the move that we're seeing here lower in the dollar, because the yen actually weakened today as well. Look at this in this June contract, Nicole, a new low for the year against the U.S. dollar. Now, the SEP contract didn't see that new low as we roll out of this. The futures expire here, but definitely a lot to watch in terms of the currency financial quadrant in general, whether you're talking about rates here in the U.S. or ultimately the currencies, the dollar, and some of the relationships it shares with those other foreign currencies.
Crazy.
A busy week for central
Velocity
bankers.
on this buy.
Lastly, keep an eye out for the Bank of Japan.
And Upstart's still going 2.8.
So that'll be something we'll be discussing tomorrow, Nicole.
Yeah, and I'll tell you, I mean, just anecdotally, I met a couple from the UK on the train, on the subway, and they were talking about the tough times that they're having there. I mean, they still are facing high energy costs.
Hey, I knew highs there, $10 or 10%.
Bonds, and they're, just a little different than the rest of what's going on there in the EU with Brexit. Anyhow, all right, let's leave it there. Ben Lichtenstein, great to see you.
Lichtenstein.
All right, let's get some more market trends that we should be watching. Joining me right now, John Najarian, co-owner of Market Rebellion. John Najarian, how are you? What'd you think of the Fed
Simo.
yesterday?
Well, it depends what you want to focus on.
Big Lots up
Nicole.
11% today.
For instance, the Fed said possibility of 2 rate hikes based on the Fed funds target moving up from 5.1 to 5.6. But then they also had 100 basis points of cuts in 2024. So that's really kind of tough to square if you're, I think a logical person, because you're saying, look, we can't get inflation down to 2% very quickly. It's almost impossible to do that. So why throw a couple rate hikes at the
On
market
up
now?
15%. This is
which will
crazy
just
FOMO
put
rally.
pain on the average Joe or Jane in this country, as well as, of course, commercial real estate and
We did it.
many of the banks,
Get
the
your
regional
shorts,
banks
no.
that are
Go
holding
long.
paper.
Go long no matter what.
In early 2024,
Every
they
dip
didn't
needs
say
to be
early,
bought
but
on
they
SPY
said
right now.
2024. That makes no sense.
The
to me,
banks are sounding
Nicole.
resilient.
So I think that we're likely to not see one of those two things happen. And in my mind, I think it's less likely that the Fed has the guts to throw 2 more rate hikes at the market. I think it's likely, though, that we will see some cuts in 2024, if not before then.
Yeah. Look, I mean, of the Federal Open Market Committee,
Buy calls right now. I
committee
mean, I don't think I could buy calls right now, but do it.
I believe. So, I guess we have to see. But if the PCE doesn't, declines too slowly, or we still have inflation, they have this sort of mandate to keep inflation in check. But the truth of the matter is there's this lag effect, and things are coming down. They are going in the right direction. That being said, I mean, what do you think about the market overall? I mean, is there some new bull market shaping up here?
I listened to your prior guests, and I don't disagree, but it's hardly a new bull market if we've been rallying as much as we've been rallying in 2023. I'd say it's a continuation
0 day
of what we've
445s.
seen so far. And if we actually did see
Might have to hold through some red, but probably work.
further past July and so forth, then
Probably not going to get in the money though.
see this rally continuing.
No,
I think
I don't
tech
think
in
so.
particular is a
15
favorite.
minutes to power hour.
Energy will become a favorite. We know about Patterson Energy.
I mean, this is
and
just not the right
NEX
time to
getting
buy him, but
together. And I think with the crude oil at right around 69 or 70 to the barrel, I think they're more or less being defensive with a move like that, Nicole, because they're basically saying, look, we don't want to get bought out for this really low price. We'd rather, since we're frackers and we can move relatively quickly, we'd rather merge and then perhaps get bought out at a much higher price down the line when we see 80 and 80 plus crude again.
I feel like I've got to do a rapid fire because you have a lot of things here that I do want to touch on. I mean, the first is that C3AI is up 10%. New high. Thoughts there?
Yeah, I'm in that, full disclosure, just like I'm in.
Well, I'm glad I closed my shorts this morning before market opened.
As far as AI itself,
Here.
2 days ago, Nicole, our systems were showing very strong, unusual activity with the stock under $40. And they were basically buying the June
Scared to even hold my
those calls
bearish
went
GME play. I feel like small caps have got to catch up with this.
on this big move that we're seeing. So people turned maybe a $2 or $3 investment into over $10 in 2 days. Now they continued to buy and they've rolled up. As you know, that means they took profits.
Small caps have not been doing the same.
Rolled up to higher strikes.
Not even the NASDAQ, really. Relatively, NASDAQ's up, but not as crazy as SPY.
Most of the activity is in options that are expiring tomorrow. We'll have to see whether we get that extension, but I think this is a great story for the rest of 2023.
I see. Okay. Patterson came up off of the recent low. It was just under $10. It had been on a downtrend. It's turned things around. What are your thoughts on this one?
Yeah, I just as I was saying, I think that we're likely to see more of these smaller players in the energy space get together through mergers because they'd really rather not get bought
7
out
stocks,
at
yep.
what I think is a cheap valuation. I think that in all likelihood, with us refilling the spur and with some of the
New tin?
activities that are picking up
No.
globally, we're likely to see higher
No new.
prices for crude oil as well as nat gas. Nat gas has been cracked hard in 2023. You know, it was up over $4 per million BTU beginning of the year, and now it's barely hanging on to 250 after the recent rally. So I think we're likely to see some of those players be more in demand. And if they don't want to get bought, one of the ways to combat that is to merge up with another player in the space, make it a little more expensive so that they can hopefully get a higher premium if indeed a buyer comes shopping.
And then Nikola and Dragonfly, those are both pretty cheap type of stocks.
And related.
What are you thinking here?
Sure. Well, Dragonfly, which is DFLI, they're going to get a patent, it seems, for this non-flammable solid-state lithium batteries. We both know that lithium batteries are wonderful, but they're also quite expensive. And if you get in an accident, they can start a fire, and you know that fire is very difficult to put out. So I think that's good news for them long-term, for Dragonfly, that they are that close to the patent. And I think as far as Nikola, very strong unusual activity in that one. Stock popped. It almost doubled in 2 days, from 87 cents up to $1.83 today. And then I think Lucid, and you spoke about Tesla, the run it's been on. I think EVs are definitely one of the areas of tech that you want to pay attention to. And when you do get dips, I'm going to buy them.
Right, I see. All right, we're out of time. I can't really talk crypto. I did see a headline flash that BlackRock is close to filing a Bitcoin ETF. We'll save that, I guess, for another conversation. John Najarian, thank you. Market Rebellion,
thank you, Nicole.
Good to see you. Thank you. Still ahead, we'll bring in our panel to talk about retail trends. We got in retail sales, how's inflation affecting consumers. We had some Fed moves and no moves. Sentiment data, much to discuss coming up.
Reverse repo came in below 2 trillion for first time since June 2022. Wow. 103 counterparties take 1.992 trillion at Fed reverse repo. Intel set to receive 9.9 billion euros in subsidies in Germany for a new chip plant. Ride is up 28% today. Another one I think is going bankrupt. Oh, dude, the Mullen volume today though? That really doesn't make sense. Just kicking scammers out of the Discord. New yearly high, 443. We did it. Congratulations, everyone. Congratulations. This really looks like post-COVID rips. Meltdown? I think we've got a little more blowing off the top to do. Had that big break back here, 426, and it's just been hellfire since then. Bull flagged up to it. Or no, above it, that's right. We consolidated above it, and this has been crazy. I think tomorrow's going to be just as crazy.
We know best, like Lulu and things like that, but others really struggled. What do you tell folks? What's your advice to folks at this point as a wealth manager?
So as a wealth manager, I think you have to huckle down and you have to put on your seatbelt, because I believe at these levels where we are, you're absolutely right. It's just going to take a matter of time. Last month, Brian Moynihan said, with all these rate hikes, it needs to take time to run through the system.
Right.
And, you know, we're going to go into another rate hike, in my opinion, in July. We paused yesterday.
Right.
I think it's just going to be a matter of time where we have a little bit more volatility. And I think, too, that the toughest mile is ahead of us, because at rates right now at 5.25%, do you think the American consumer can sustain another 50 basis points, another percent hike, when banks are literally going out of business? And like, to your point, you said the consumer sentiment is literally dropping as we speak. So it's just going to be a matter of time before the consumers start dialing back on their spending.
What's amazing at the same time is how I have people coming on here and saying, you know, the market's really taking off and there's strength, and it's you almost, I feel like I hear two different stories and they all make sense. You know, the market moving higher, if you look at the charts, it's not unusual to say that the markets are at 52-week highs and heading higher, certain groups. at the same time, you see weakness, right? And for the consumer. So, Jerome, maybe it's also certain names or groups within retail that seem to be doing better than others. What would you make of that?
Right. So to his point as well, consumers are moving away from the malls, but they're going to restaurants, they're traveling, they're staying at hotels. So that's really that's the biggest winner by a landfall. Compared to all the other sectors.
And what are some of your favorite stores?
In terms of the names, Walmart still is the one that analysts keep raising estimates for. Nike and Lululemon, those in terms of individual names.
Those were the brands that I was talking about. Mario, final thoughts here on what you do like.
So, overall within the retail sector, I think it's a bifurcated market. I agree with fundamentally sound companies like Walmart, one of the biggest retailers, or if not the biggest retailer in the world.
Hey.
I agree with that sentiment, but I also think
Okay, sorry.
When it comes to investing right now, market just made a major move, and I think going the next 6 months of the year, I think you have to pick and choose your battles, and I think also going into companies that are fundamentally sound and not these momentum name trades. I think a lot of momentum's recently happened. The market moves quick. And I think sometimes you got to take a step back and look what makes sense and what doesn't make sense. And right now with earnings, if you look at overall the S&P 500, we're at about 19.5 this year's earnings, 17.5 next year. We're reasonably valued at these levels, but if we go above these levels, then just like the American consumer, I think we need to be selective with the companies we invest in.
Yeah, good to see you both.
Yes,
Mario
wonderful.
Veneroso, Jerome Martis, wonderful to have you both. Great to see you. And this all on the heels of the retail sales. All right, thank you, friends, for being with us here on the watch list. I'm Nicole Petalides. Keep it right here. Oliver Rennick, Market on Close, next.
Line calls. I mean, if you're willing to get out of them real quick, looking for like 5%. Otherwise, you gotta wait for some pullback, some consolidation. Coming up at 3 o'clock, it'd probably be better to get puts now. But yes, holding your weekly GME calls is probably futile, probably worthless.
Mark Dow joins us for a very full
day 2 Fed recap. Equities are jamming, and it's across the board. It's probably one of the prettiest parts of this rally we've seen yet. It's not just big tech. In fact, it's sort of ho-hum in the mega cap world today. Amazon's up less than 1%. Tesla's actually down. Apple, Netflix, Amazon, or Alphabet, all kind of 1%. So it's not like there's extreme concentration or unique degrees of leadership. It's broad. It's just about every factor ETF. It's styles across the board of investing, all working, value, growth, momentum, min vol, high vol, low beta, high beta, you name it, it's up. Jay Powell cleared the path, it seemed yesterday, and frankly, all of this makes sense to me with one small little exception, which is bonds. I'm surprised that we don't see yields up.
The SPY makes an engulfing candle here.
As firm as they are. Let's take it piece by piece here. Dollar down. That one's easy. Real easy, right? Dovish Jerome Powell, hawkish ECB, the timing of the interest rate path for these central banks is shifting. The baton is being passed right now. Jerome Powell takes the skip, but wait, don't call it that though. He wasn't even sure what to call it yesterday. That's my number one question to mark down this afternoon. How good of an execution from Powell could it have been if he didn't even know what to call it? The market is telling you right now what it is, regardless of what we label it. Dollars down. ECB and the rest of the world, with the exception of China, still are fighting inflation. Number one, because their inflation levels are still much higher. Number two, because they started late. And then number three, the market seems to be thinking this skip maybe could be a little bit more of like a pause. And that generally is the camp that I've fallen as well. When you follow the logic, it just didn't really seem like the market was going to be too scared about the big bad summer and fall hikes to come if the economy is stable right now and Powell feels comfortable not hiking rates against 4% inflation. So it seems that as far as asset prices are concerned, and the economy too, that we have the clear here for the economy to stabilize, for asset prices to get what they want from an accommodative monetary policy, and then possibly the potential for inflation to retrench, which then could be the problem later on. High beta stocks are up. The regional banks are up. There's really nothing here that suggests the market is worried about hawkishness down the road that might spoil the party in the short term. The idea of a hawkish pause just does not resonate with me, and I think the market is in line with that here. Strength in stocks makes sense at this point, especially when you see the transition from the tech-specific dominant rally into a more broad one. To see the more cyclical components of the market working today also fits in line. I think it makes a lot of sense for crude oil to be up 3.5%. Because again, look at this situation for the economy. Credit spreads have not tightened meaningfully since the regional banks. There's been no evidence that that is a major risk to the economy, beyond a major risk to a couple companies. Over the last year, we've seen the Fed's effects. The crypto world blew up. We had SPACs that blew up. There were clearly effects of the interest rates, but right now, today, and yesterday, when Powell chose to go on pause, financial conditions are near the loosest in a year. So the economy, by most measurements here, while it is slowing down, is pretty darn stable. And by not applying pressure on the economy with interest rate hikes, you now even have more potential for the economy to strengthen. That would be positive for crude oil. It would be positive for banks and cyclical assets. That's why I'm surprised that we have yields down. By the way, here's the chart of crude. Pretty good little base forming here for crude potentially as well. So watch WTI. I do think that could be a really interesting trade over the next couple months if we are going to really see some refrothing of the economy and firming up of the economy. Maybe it's time for crude to get out of the dumps. But back to the point on bonds. There's a few parts of this that don't quite fit together. One of them is bonds. I'm surprised to see yields down this much. Be careful before you associate yields directly with dovish or hawkish. It doesn't really work like that necessarily. There's been plenty of hawkish moments in the past 2 years where yields are down. There's been dovish moments where yields are up. The other thing is with Bitcoin too. This is a really, really big test for Bitcoin because it has been doing very poorly next to stocks and now there's no excuse for it not to. It should be booming. It should be roaring. Bitcoin usually loves a dovish Fed, but the market here seems like maybe it is also separating the good from the bad, and maybe crypto's just in the bad camp now. So want to watch to see if Bitcoin catches up to stocks, and also want to watch to see if yields start to inch their way higher. But right now, most of the pieces fit together pretty clearly for this puzzle, and it likes what it saw from the Fed chair. Kevin Hinks here with me in studio. What stands out to you today, Kevin?
You know, the eyeball test on the market seems ridiculous, the strength. But when you start to dig into the numbers, it makes sense why we're at least not down, right? Now, we're stronger than most people thought we'd be, but with the dollar doing what it's done based on Christine Lagarde being more hawkish than Jerome Powell, you can make the case for the dollar being lower, and that's good for stocks.
Definitely.
You can also make the case for the 10-year yield being lower, and that's good for stocks.
Right. Or you can make,
making the case why it's lower, I'm not sure.
The
but
dollar
it
is the easiest one to me. The
dollar's easy.
Totally makes sense.
The rest of the world has to catch up on inflation where we seem to be at or near the end.
Yeah.
Right? I mean, let's face it, Europe is way behind us. They raised their rates to 3.5, which means they're 150 basis points lower than us.
With inflation is twice as high.
With inflation worse than ours. So
Fed wants. And see several liquidity drains really come to fruition. So again, laying out the landscape, laying out the short-term flows. The landscape and the macro doesn't play out over days or weeks or even months, right? That plays out over years, quarters and years, but the flows play out over weeks and months. And so the flows are dominant in the short term. That's what's driving this. But the macro liquidity, the realities of what's happening here are quite out of step.
Hey, Jem, to the last point on our list of things to monitor, your third one, vol up, stocks up. Can you give me a quick 30-second explanation for how we want to measure vol up to the extent to where it becomes problematic or indicative, maybe rather is the word?
Yeah, there's a pretty straightforward way to do it. Go find what the at the money is today, right now, in the S&P 500.
Okay.
Go look at that option, find its implied vol. Go look at where that implied vol of that specific strike was yesterday.
Fixed strike vol.
Where was it yesterday? That is fixed strike vol. Look at it across expirations, and that'll give you, convert it to dollars if you want, keep it in vol if you want, but that'll tell you what's happening to implied volatility underneath the surface. Not what the VIX is telling you, but underneath the surface, and that's what's
wonderful.
Critical.
Awesome. All right, man, thank you, Jem Carson, for the update
Always
to the framework. Appreciate it. Okay.
Take care.
Buying calls and selling stock is the way to dabble in anticipation of a more meaningful rollover. Watch Fixed Strike Vol. Jem Carson from Kai Volatility Advisors. Gareth Soloway is joining us to do some trading. And we're going to hit some big names, including Tesla and Bitcoin, of course. Don't miss that conversation. We'll be right back.
Sorry, that was me. Consolidating up here.
Good to be here, buddy. And just for the record, I'm not a follower. I'm a leader. So I'm actually shorting the market up here. I am shorting the market up here. There's some interesting things showing up in the charts, and I just wanted to point out this thing to you guys. Is that
Everybody's shorting it.
.com bubble, the market fell 41% initially, and then rallied back 41% before the bigger rollover that took us down 72%. If you go back to, let's say, the Great Depression,
you're looking
the
at
market dumped out 52%,
another
rallied back 50%,
50 points
before dumping out
in the
another
SPY or so.
80%. A couple other things to note here. If you look at the
Looking for
NASDAQ,
double top.
guess where it is? Dropped 38% from the all-time highs of 2021. It has now rallied 37%. So these are the types of things as a technician that I'm looking at, and it makes me kind of get in that position of saying we're probably closer to the end of this bull run than not.
What do you find compelling in that message? Is it the valuations? I mean, it kind of seems like you're making a historical comparable to say, look, you know, it's standard to kind of have these types of bounce backs, but if we go much further and do a full back to all-time highs in the S&P, I mean, it's a different story.
Yeah, no doubt about it. I mean, part of it's valuation, right? We haven't seen any change in the economic outlook overall. If anything, the Fed has been a little bit more hawkish after yesterday's meeting, and you've seen multiple expansion. It's no one's saying, hey, we're going to go back to this robust growth in the economy. It's more like, yeah, we still may get a slowdown, maybe it'll be a soft landing, but they're not talking about us ripping in terms of economic growth. And so this has really been a multiple expansion. To me, I think the crypto story plays into it. I think crypto used to be where a lot of retail investors were playing, and now that's dead money. So that's bringing money and chasing names like Nvidia and Tesla and all of these type of things. And then ultimately,
says
it's
Nvidia
kind of
also.
a chase for returns. I mean, you have fund managers that are saying, hey, listen, we got to be in this to get it. You have the AI story and all that stuff, and it is drawing a lot of money in. The question is, at what point do valuations get so rich that you then start to see the reversal?
Okay, and it's a tough game though, right? Because it's timing. I know when we spoke earlier this spring, you were looking for valuations to soften up in Apple, Microsoft. I mean, this stuff keeps going. What will cause it to stop?
Yeah, and you're right. You're right. So, when we talked last, Bitcoin was at 30,000 and change. I said, all right, that's going to pull back. I also expected the overall asset markets to pull back as well. The asset markets haven't. We haven't seen the stock market pull back whatsoever. And you're right. I think Microsoft today hit a new all-time high, or at least touched double top. We've seen Apple make a new all-time high. So there's no doubt I've been early on that trade. But I still do believe that the market, again, is not factoring in what the rise in interest rates on such a enormous a level will mean to the overall economy. I think it's a lagging indicator, and I still expect us to be in recession by year end.
Okay. The potential here for the Bitcoin and stock relationship to disconnect further or reconnect. What are your thoughts on that? I mean, it kind of seems like this would imply you think stocks are going to reconnect lower down where Bitcoin is.
Yeah, it does seem like that. It seems like, Bitcoin, because of the regulation, the altcoins especially, they're in this kind of no man's land now where they're not a risk asset, so they're not going up with the stock market. But at the same time, if you hear any sort of negatives about risk assets, there's no safety hedge within there because the SEC put their foot down and kind of basically said, hey, these are almost all securities, and we're now going to sue all of these exchanges. So to me, ultimately, I'm a huge long-term bull on Bitcoin, but I think that, again, at some point, Bitcoin still has another leg lower. I'm not even convinced that the 15,700 level is a low on Bitcoin just yet. Now, when it comes to the stock market, I do think, again, we will see some sort of rollover mirroring past big cycles. How low we go, that's the tougher question. And again, even I'm kind of questioning the overall thesis there of what's going to be the trigger to kick us off to the downside.
Got it. All right. The exchange stuff it is showing up in the correlation with stocks, but price, we're still trying to hang on to this 25. BTC finally woke up a little bit here this afternoon, and credit to you, been on that overall relative weakness.
Jay from the Bay, thanks for the support today, buddy.
Short the stock market.
For your ice cream.
Do you sell upside, buying puts here, further out? What kind of structure? Give us an idea.
Yeah, so the way I'm handling it is just slowly inching into these positions, and I'm talking about like Tesla. Tesla up here has had a monster run. I think it was up 13 straight days until it had a small down day yesterday. That was a 50% retrace. And again, I look at these Fibonacci retrace levels, things like that, where you're coming and using the technicals to pinpoint. So you see the stocks extended, but we know stocks can remain extended for long periods of time. So you want other factors. In this case, Tesla has a 50% retrace from the all-time high to the lows where it was around that 100 marker. And then you take into account other names like NVIDIA, which for me, I look at it and I say, okay, the AI story is a great story. So was the dot-com story back in the late 90s, but we know that you had a flush out first. And so I'm kind of in the camp that things have gotten a little too far ahead of themselves with the AI story, and it's been a chase for the name. And I do think you'll be looking for pullbacks there. So kind of the bigger beta plays, the bigger ones that have bigger moves, those are the ones I'm slowly inching in on the short side on.
All right, nice. On the another short front and a different department, different sector, you're looking at housing. I mean, sounds like you're ready to fire some bullets against some of these big winners here, Gareth, because you know, KB Home and the housing trade has been a beast.
Yeah, it has been. And KB Home, again, right near those highs. We saw Lennar's earnings, I think, just yesterday afternoon. They were great as well. I'm in the camp, though, that how does it continue? I mean, I'm trying to figure out the bull case for housing, for residential housing even. You have interest rates now at 7% for a 30-year mortgage. If we do see a climb up in unemployment, you're going to have people that already are struggling to afford a mortgage, and then people are going to start losing jobs. And I think one of the things that people are not talking about enough, the jobless claims this morning. So last week, it was the biggest jump since 2021 to 266,000 people filing for unemployment. Today, I was saying to myself, okay, was that an outlier or was that the new norm? And today we got 262,000, which is just 4,000 from last number. So now we're starting to see something that you could almost say is maybe a trend of more people filing for unemployment, which could spell the end of this kind of great market for jobs that we've been seeing that's been holding up the market for so long.
All right. And so then you answered my last question, which is your broad macro framework still looking for slowdown into the year, second half. Sounds like that's the case.
That is the case, absolutely. And I still think that we'll find ourselves in a recession. I think the Fed made themselves very clear yesterday that they're not going to be hiking, or I should say lowering rates for a substantial amount of time. So even if they, let's say the jobs numbers weaken and we don't see them raise 2 more times, like I think 66% of the panel said they would, then you still are looking at a situation where they're not cutting rates for a long time. So this market better be prepared for high interest rates for a long period of time.
All right. Gareth Soloway, thank you very much. Always a good,
thank you so much.
Detailed process of what you're doing. Bring us, appreciate that. Gareth Soloway, Chief Market Strategist, InTheMoneyStocks.com. Fading quite a bit, fading Tesla, fading KBH, and continuing to fade BTC. Tom's found some options trades of his own in today's market. We'll see where whales were splashing around, and Freeport, FCX down, but marginally. Xpeng, pretty big news there, and Uber on the list today.
Coin went green there. Interesting. The volatility on coins crazy. Large. Dealers flip short gamma at S&P 4390. Gamma squeeze in progress. Yeah, we saw it right here. The Fed and the SEC are investigating Goldman Sachs' role in buying Silicon Valley Bank's securities portfolio while it was working on its doomed capital raise before the bank's failure.
of these Chinese companies have been kind of lagging. The general electric vehicle like funds and stuff are all way behind Tesla.
And remember this, just about a week ago, China came out and instructed all the banks to start easing restrictions on auto loans, right? So that would probably be a bonus, but the stocks hadn't been reacting positively to that news.
All right. Big day for Xpeng.
Yeah.
How about Uber? Let's keep talking some cars here.
Yeah.
Breaking out, new high, 6%. I mean, the good times are back, you know?
1.5-year highs for
Amazing
Uber.
stuff.
And after all these gains that we're seeing in Uber over the last 52 weeks and actually a year and a half, Mizuho comes out with a buy rating, names it one of they're incrementally bullish on this name. Share is expected to gain in the category leader, profitability, growth. I mean, they're talking about all the things that they were trying to talk about 3-4 years ago, Oliver. Up 75% so far this year, so having a good run here. And then also, Uber's implementing full-length video advertisements across all of its ride-hailing apps. So there's another revenue generator right there.
Okay.
Uber Eats, alcohol
Video
sales
content?
platform.
Selling video ads.
Yeah,
So it's
they're
gonna
going
be
to
like the
video
old-
ads.
It's going to be like the old taxi.
The old
What are they going to
taxis.
paint them all yellow next?
Right. And I used to watch all that stuff in the back of a taxi as I used to get a ride down to the Board Options Exchange.
I'm Sandy Kenyon. For those in New York, I'm Sandy Kenyon with your Movie Minute.
Yeah, you guys had a movie minute. We had something different here in Chicago. But yeah, a lot of...
Nobody knows that here.
A lot of...
Nobody knows Sandy Kenyon.
No.
It's a shame. I do a great Sandy Kenyon.
Okay.
I'm Sandy Kenyon. That's your Movie Minute.
Okay, we're going to avoid that.
Go look it up. I nailed it.
But that being said, Mizuho getting even more bullish on it with even after the run that it's had so far. As I mentioned, 1.5-year highs.
I didn't know Space actually had revenue.
Out in the August cycle, so they bought over
Crazy.
30,000 the August 45 strike calls for an average debit
Not
of
bad.
about $2.50. So that break even just above 47.5 over the next 64 days. That's about 9% above the current share price. Now, this trader also, because it was a combination trade, they sold out of their long August and September 40 strike calls, a total of about 15,000 of those options. There was big open interest in those positions, so I'm thinking what this trader did was sell out of his long winners that have been doing really well, and then reestablished a position here in the August 45 strike calls, but needs another 9% to the upside. But I think the key with this this unusual option activity is the fact that you're giving yourself nearly 2 months in this position for Uber to continue to move higher. Call volume, 4 times normal daily average volume over the last 5 trading sessions. And that's saying something because we've had big volumes in Uber over the last week of trading just due to the graphic upside move in the NASDAQ and a lot of these names.
Oh, I like that, Tom. I might steal that description.
You can.
Graphic.
Yeah.
Child warning.
Yes.
Before you look at this rally, it's
I feel
just
like
filthy.
Ubern's kind of undervalued.
Okay.
It is.
Graphic.
It's a graphic
gains.
rally.
Yeah. All right.
To say the least.
Last one you've got here with the pretty PG move, though, is Freeport McMoran.
Yeah.
Crude's having a great day. Where are we at with copper? I haven't checked copper in a
Copper
couple
price about 9% higher over the last few weeks, so we've seen
Should
a little,
be jamming
little
here
bump there.
with
And
crude.
look at the dollar, Oliver. That's why you're seeing some of these commodities make moves to the upside. That lower dollar helping out commodity prices at this point. ECB hiking, us staying put, dollar down. That's supportive of equities. That's supportive of some commodities. Gold did bounce off 3 months low.
You too, Take Flight. Thanks, man. Thanks for the support.
Earlier in the session, so that's actually positive now. That's where Freeport McMoran, that high correlation to the commodity space in those, especially copper. And the same thing as the other 2 stocks we talked about. A lot of call buyers to the upside here. And I think this one, a little bit of a flyer here from this unusual option activity. Out in the August, 47 strike calls. Trader bought over 10,000 of those. Average debit of just 62 cents per contract. So that break even of 47.62 over the next 2 months. That's about 18% above the current share price. We haven't been above 47 level in a while for this stock. So somebody thinking that maybe a breakout in the commodity space is going to help. We saw some of the housing numbers. I always try to look at some of the commodity space, especially copper, that goes into homes. Lennar having a great day, hitting all-time highs. So that that momentum in the home builders starting to pick up. So is that a good sign for commodities, especially copper?
That's why I'm saying yesterday seemed like a very pro-cyclical, positive economic event, because even Powell himself said he sees housing firming. And he's not worried about it being an inflationary force. So I guess it just keeps, gets to ride a little bit here.
It's going to be an inflationary force because of the fact, Oliver, they keep on talking about those rents coming down. How can rents come down when demand is still robust for homes and a lot of people have affordability issues? Number two, interest rates are double what they were from a year ago on a 30-year fixed mortgage. So you still have to rent a place. You still have to have a place to live.
Yeah.
So I don't think that inflationary pressure to the downside on rents is going to expand as fast as a lot of people are expecting.
Me neither. Totally agree. So it makes sense for copper to be strong.
Yep.
It would make sense for crude oil to be strong. So copper, what's up? Little changed. Okay, thanks, Tom, for the trades, though. Good stuff. Coming up, let's talk some more about commodities with Mr. Bob Iacchino. I'm very much looking forward to this conversation. I trust Bob when it comes to the crude oil analysis in particular, like all his analysis, but he's a great oil trader. So let's hear his thoughts as WTI firms up.
Barbecue, little move up there. 1975, up 7%. Fifteen minutes to close. Barbecue 1975, up 7.8. GME down 3.3, 24.85. Jeff Brands pop back up to the high, positive 54%. Nickel up 30%. OEV popping up a bit, up 20%.
So right now, nothing is pushing to commercial demand of crude oil. And we're in June. I mean, the summer driving season is here. The initial spike of it is gone. So I don't know where the demand is going to come from if it doesn't come from China and better manufacturing and a better manufacturing scenario, which could come as central banks back off. But as Jerome Powell said kindly and Christine Lagarde said very unkindly, they don't seem willing to do that just yet.
What about the potential for a great American revival here, Bob? The Fed goes on hold and doesn't come back. What if it's a permanent pause? I mean, the market kind of seems like last 24 hours it's trading like, maybe this is a permanent pause. And I don't know why we wouldn't. I'm not sure why we'd be too scared of Powell after the dovish move he's made.
Well, I mean, as somebody said who was quoting Shakespeare, there's the rub. I mean, you look at it from that perspective and you're saying, okay, fine, they've decided that they no longer need to hike. What does that mean economically? Certainly it doesn't mean strength. It means that the unemployment rate has moved closer to that 4.1% that the Chicago Fed says is full employment, or possibly above it. It means that inflation has come down with some of this reduced activity that we've seen. The only part of the economy that continues to send people for loops is, number one, as you guys just talked about, housing. Okay, the housing thing is a problem with inflation because housing prices lead rent prices. They're basically the ones that set rent prices over the medium term. So when a lot of these higher rents that were agreed upon, the leases that were signed 8 months ago, 9 months ago, start to come to a renewal rate, if houses continue to rebound from where the little dip that they had over the last 4 months or so, those rent prices are not coming down. A lot of people are looking forward to that. That, I think, is why Jim Bianco said this on our podcast. He said that he thinks inflation in July reported in August is going to start to trend slightly higher and not lower, which, I mean, maybe the Fed listens to Jim. Maybe they think that's why they need that sort of optionality for another rate hike. So I'm worried about that dynamic. The Fed pauses, and yet we still have a soft landing that they essentially have never engineered, except in 1994 briefly. But other than that, they failed every single time. And I'm not sure why we would believe that it wouldn't either be a hard landing / recession or no landing. Those to me seem to be the only reasonable options at this stage. I could be wrong.
So you're not running out to buy crude oil calls, basically.
I have not bought crude oil yet. I mean, we've talked about this a million times. For me, I needed to break out, test, have that test hold, and then continue higher. Interestingly enough, chart manufacturing PMIs, Oliver, you see the exact opposite thing. You see a breakdown, then a move up to resistance, and a break back down. That would be a short signal for me if I were selling PMI futures.
Okay, yeah, exactly. No, you're right. That chart of PMIs came down, tried to come back up, got stuck, back down, manufacturing sub 50. Technically, the level for crude that you would want it to, test and hold and retest and all that, what's that key area there? Can you give me a level we should keep in mind?
It's right around $78 because that would it'd break the defining point of the upper trend line of the downward sloping channel.
All right. Thank you, Bob Iacino. Good chat and a helpful framework for us to use in trading crude oil. He's founder and chief strategist of Path Trading Partners. Got our Schwab panel to take us into the bell when we come back. 10 minutes left. Kevin Gordon and Cooper Howard will join me as we watch stocks melt higher. It continues the rally unstoppable after Jerome Powell yesterday.
IP dunked on it at the buzzer? No buzzer yet. Got 10 minutes. But yeah, we got that engulfing candle yesterday. I have an inverse hammer. Kind of playing out like start anticipating. Some consolidating, some downside probably. Momentum is stopped to the upside. No, yeah, it's not bad. After the huge rally it's had. I didn't realize Space was actually making money. I mean, they're not profitable, but they actually have revenue. Buy coming down there a little bit for the last 5 minutes. Here's our clay man.
Later on this year. But I think one important thing to look at that is how much are they actually going to hike versus how much are they actually trying to jawbone the market into hiking. So we long talked for all this year about cut. The market's expecting cuts. And I think what Powell came out and the rest of the FOMC members came out and said, well, we want to really get away from this idea and this notion that the market believes that we're going to cut. So let's give them the plan that we're going to hike by 2 more times this year. Now, whether or not they do, I think that's one of the reasons why they probably paused to give themselves some time to see how the dust settles and watches everything comes out. So I think that that's really kind of where we're looking at with the fixed income markets today, is that it's kind of just having a letting the dust settle really from what's happened yesterday, Oliver.
The message you think is then that the Fed will be a little bit more kind of dovish in the outlook, or how do you, Cooper, think about the direction for yields as it pertains to the direction for interest rate hikes? Because this is always a kind of a challenge, right? Do yields go up with interest rate hikes because the interest rate is going up, or will yields go down because the hikes will pressure the economy? You know what I mean?
Yeah, and I think that really what you have to look at is you have to break the yield curve into different parts. And this is oftentimes when we're speaking to more novice novice fixed income investors, I should say. They look and say, well, one interest rate. There is no one single interest rate. There is no one single bond market. And if you look at the short end of the yield curve, that very much is dictated by what Fed policy does and what the Fed is expected to do. So long as the Fed is expected to continue to leave rates at this elevated level, I would expect that to stay at elevated rates there. If you look at the long end of the yield curve, that tends to be driven more off of growth and inflation. We saw some reports this week, CPI, PPI, shows that there are signs that there is disinflation, or I should say that inflation is starting to come down, albeit it is a slow, long process. We've seen a decline in commodities prices, notably gas prices. That was a boost to retail sales today, so that's a benefit to the overall consumer. But I think that the long end of the yield curve is really going to be dictated by that growth and inflation outlook. So I wouldn't be surprised, Oliver, if we do move a little bit lower on the long end from here and kind of keep this inverted yield curve. Now, what does that mean to an investor? I think it makes sense to extend duration in this environment. Consider locking in some longer term yields. So if yields do potentially move lower, as we would expect, you do have those locked in. I also think that if yields move higher, right now we're at relatively attractive levels, especially to where we've been in historical basis, especially recently. So it does make sense to lock those in. I think that now can be an attractive time going forward, Oliver.
I see. So you think it's still basically a win-win for longer dated bonds. Let's say yields go down, cool. You make some principal too, and you make a little extra. If yields go up, all right, fine. I locked in, a little shy of 4%, not bad by historical standards. Kevin, one of the things that you're looking at, I think, is really interesting, is kind of the opposite, or maybe a complement to the FOMO trade. Some of the stuff out here, we heard from Gareth Solway today as a trader. He sees it as a little FOMO, fear of missing out. But you're watching FOGO, fear of getting out?
Fear of getting in, fogey.
Yeah, I mean, it's maybe a little bit of a play on words, just, and we all talk about kind of missing out on the trade that's worked so well, up until the past couple of weeks.
You're gonna get a bell.
We've been talking about that being sort of everything under that large cap growth moniker. But, that's starting to broaden out. But yeah, I think there is sort of a, maybe a reluctance on the part of investors to get out of some of the names that have just become the momentum trade this year.
Fear of getting out?
So far, in our view, this is still the benign scenario where you don't, in an ideal world, you don't want to see them completely collapse and then bring the overall market, especially the cap weighted indexes, down. So, to the extent you could still hang on there, and or if it works for you as the investor, trim into a lot of that strength and kind of put that to work in areas that haven't been as loved. Obviously has to work within your own, asset allocation and what your portfolio goals are. But if you're able to do that, we think it's a pretty prudent strategy at this point.
Okay. Jem Carson earlier talked about selling stock and owning calls, more of kind of short to intermediate approach.
You're fired.
But when you think about, curing the fear of getting out, is it about selling the equity for profit that you have in a way that makes sense for your portfolio? Or
Fugazi. We had the 10 minutes Fugazi. Not a whole lot. A little bit of volume, a little bit of sell-off.
Well,
What a freaking righteous day for the SPY. Look at this thing. Just massive short squeeze. Gamma squeeze. All the squeezies. GME squeezing the other way, down 3.5. Barbecue up 6.5. Down with that. Maybe starting to reverse the trend here a little bit. The downtrend we've been in. Yeah. Look, we're looking for kind of a move up and finding support above 20 cents. Yeah, for kind of inverse head and shoulders. Didn't quite get it today. Got close, 1950. I guess 20, yeah, a little higher, and then showing some support. Not just a straight rip. We need to figure out where it shows support to show actual reversal. And then I might be averaging in a little bit for the next trade, next swing, which I will get out of if you guys remind me. Like Tree reminded me here, but I disregarded. Yeah, so a little average down here. And see what happens. I'm not averaging down yet, but today is a good sign. I'm gonna keep reading some DD on the 10K on barbecue. See what's going on with that, because that's a huge fundamental difference if it's in Chapter 11 just for some of the subsidiaries, like not all of the company that we're holding shares of. It's just for how unlikely and how crazy that would be, makes me think that that's not the case. But I'm gonna look into it. Green candle there on barbecue. GME, yeah, still have this divergence, which is bearish. We'll see though with how much the market just pumped. We might see the small caps and IWM and GME and that kind of thing rally up and try and catch up. Doesn't necessarily have to happen, but buy, huge move today. I can't help but think tomorrow's going to be somewhat green. Probably not this big, but probably big. Probably still somewhat green. I love Green Fridays. And actually tomorrow's OPEX, so it'd be kind of interesting. Be very interesting. Got him, got the bot. I snipe bots like you snipe the grays. 450 tomorrow? It could. I mean, yeah, it's possible. But it very well could consolidate some tomorrow and just be like a small candle. Also, not be quite so lofty. So, time to go long with this bull flag that was consolidating above the breakout, which kind of said it. I didn't want to believe it, but yeah, TA wise, it was like, yeah, bullish. Had an engulfing candle, but then it was like, no, there's a bull flag. We're above a breakout, and since we've said that, we've had 5 days of just rip your face off. Nicola, pretty good move today. Nicola's chart's been solid. Pretty big wick up there though. The run might be probably see some profit taking on all these runners this week. So Nicola being one of them. Might see a little pump still, but I predict by end of day you're gonna see some selling off. Don't know what's going on with Mullen, but I'm very curious. I want to have shares just to have exposure to all that volume today. I was out of control. 385 million volume on Mullen. Something's going on there. The float's only 210 million. Yeah, that's crazy. Trades. Did some futures trades. Actually, my best futures trades were while I was sleeping, which happens often because market does big moves while you're sleeping, and you're sleeping, so you can't touch it and mess with it and screw everything up. So, like I said, I entered that short here and closed it out here. So, looking at that huge move that way, it's like, oh, it's a tiny trade, but this is actually nice. It was just like 0.4%. So during this day today, I just traded away some of the profits more or less. Some green, some not. Kept trying to time the top, and then I got busy and wasn't focused, wasn't able to jump in on some of the longs. Even right here, I mentioned this inverse head and shoulders. And then up here, the double bottom, I was tied up there, so I couldn't close my shorts. So I ended up not really losing money on the shorts at least. But yeah, nice day for the long. I mean, this is 1,000, 2,000, 3,000% gainers on SPY calls today. Definitely. Yeah, so the futures, and then what did I do? I did a GME, a bearish play on GME, and I think that's it. Yeah, not a whole lot. I did add some trades on the Theta farm. I actually opened up a lot on the Theta farm today. 1, 2, 3. Opened up 3 more positions on the Theta farm today. So farming's going good, and see if it continues. This month's been a little slower than last month. Last month we did 10%, actually like 11%. We get just a couple green days on some of these, it'll be a good month. But so far it's starting out a little slower. We're only up like 1%. But that's how it is with selling Theta. Just takes 1 or 2 days for the premiums to go. It decays quickly. Thanks for watching, guys. Thank you much for the support. Ace, thank you for the gifted membership today. Tasty. STI. Thank you for the dono. I'm saving that for tomorrow's coffee, which I might need. I was able to refrain from getting coffee today. Thank you guys for your likes, 53 of them. Fun day. Watch shareholder meeting, or listen to it rather. And yeah, see what we have in store tomorrow. Thank you, Take Flight. Thanks, Jack Wolf. Thanks, Jay from the Bay. Thanks, Carlos and Trader. Thank you, Sterling. Hope you guys had a good day in the market. Thank you, Trader. Have a great rest of your day with your family. I appreciate that, Trader. Thank you, guys. See you on Discord. Sub up, like up, comment down. Happy money sticks around. Okay, peace out.